Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Welcome everyone. Good morning. Thanks everyone for joining. Welcome to Stocks Network Trading. My name is Ron. My partner is Dave. It's almost 6 a.m. Eastern. It is Thursday, October 16. We're more than halfway through the month of October, and we're just chugging along here in 2025, this crazy year. Lots of volatility, and it's just going to get even more insane as we go along. So please, everyone, trade with proper risk management today, next week, November, December, until we get out of this entire year. Okay, guys? Some of you guys are doing fantastic this year. This has been, for most of you guys, your breakout year in trading. Man, and I'm so glad to hear that. Some of you guys are still working on a few things that you got to improve on, and some of you guys are having a horrible year. But we all go through it as traders. I just hope everyone is improving and getting to the side where you're stop gambling in these markets. You're going to stop over leveraging. You're going to trade with proper risk management, and you're going to learn how to be consistent in these markets. We're here with you on a daily basis, myself, Dave, and all of the snipers. So we're doing our best to make sure that you guys are sticking to your discipline rules. And we're here to remind you every single day to adhere to those rules. We're here to help you guys, to remind you guys if you hit your daily goal, you guys should be out of the markets and doing other things, okay? Last night, I know it was a different time than what we normally do, but we're going to start to introduce some different sessions in the next few weeks and going into the end of the year. We did a Tokyo session last night. It was unbelievable. We started at 7 and we finished right at 8:30. It was a 90-minute session, and we hit this trade right here. This is where we did our analysis. This is where the futures opened up right here at 8 p.m. This bearish candle, we waited for it to close. We saw it broke the opening balance, this yellow line, 8:05. The buyers came right back in. We waited for the closure of that candle. It was a bullish engulfed candle. And then we took a buy on this candle. As soon as it opened up, small pullback right there. We took a buy at 4,210.75 cents. And it ended up hitting its own daily high of that candle right there. It broke its daily high, that purple line. We got volume close above, and then it came back down and it retested its previous daily high and held it as support. And that was the old all-time high of gold, 4,218, and we just continued to break out of here. The entire move ran up 150 pips. And this is just a reminder, guys. Some trades don't always run up forever. I know we want to hold these things and get 1,000 pips, but you can see if you didn't do anything, if you didn't take out some profit on the way up, you can see after the call, it came right back down to the entry point. So if you didn't take out any profit, you're going to watch approximately 50, 100, 150 pips come all the way down to your entry. Maybe you had a break even, maybe you didn't, but thankfully it got some support again there and then took back and then went back up. But look at the moves in the market. This is an Asian session. This is Tokyo. You're getting like 150 pips on the way up, about 150 pips on the way down, and then another 150 to 200 pips on the way back up. So it is unbelievable, the volume and volatility in these markets. It just gets even more volatile and more volume in New York sessions. So guys, that's why I'm telling you, just please use proper risk management when you're trading, because these are big body candles and these are big moves, okay? Next week, we're going to be doing some more Tokyo sessions. So if you missed it, you can join us at 7 p.m. Eastern. We go till about 8:30, 9. Hopefully we can get into a trade, hit a daily goal, and just be done with the markets. And so next week, we'll go Monday, Tuesday, we'll do Tokyo. Wednesday, we'll go back to a New York session. Thursday at Tokyo, and then we'll finish off next week with a London session. And tomorrow, guys, just a reminder, we'll be doing a London session. So that one starts at 2 a.m. Eastern my time. Ron will be half asleep, but I'll wake up as soon as we start doing some analysis. So yeah, that was fun, guys. So what we're going to do is we're going to start all fresh. You can see I just went to a fresh chart. We're going to go exactly how it's moving right now, back up bullish right now. We're going to do an analysis, whole top down on gold, NASDAQ and US30 today. We've got COMEX in 2+ hours, and then we have Wall Street. Okay, we will get to all of that, guys. You're asking me questions right now. What do I think about US30? I have no idea. Wait till we get to the charts. Wait till we start doing a top-down analysis. Then maybe you're going to start to see a little bit of a bias, and then we can talk about it. Okay, we got to get through some news first. We got to do our housekeeping here at SST. First thing is, let's go through today's news. There was a lot of news coming out of Europe. You can see that there's a lot of British news. So regarding the pound, we had at pre-London GBP, the GDP month over month, high impact red folder. The previous was negative 0.1, previous GDP month over month. The forecast was a positive 0.1, and the actual result came out exactly the same, positive 0.1, no change. There was a lot of news coming out in pre-London, and then we moved into London market open. There was some more Swiss news, British news, some Eurozone news, Spanish 10-year bond auction, Italian trade, and we went through Europe right over here. I wasn't trading it. I was sleeping at this time, but now I can, if I was trading, I would be watching all of these folders to see what the results are, paying more emphasis on the high impact news. For our session, we got to look at what's happening around 8 a.m. Eastern in North America. So we have some Canadian news at 8:15, housing starts. I don't think that's going to affect gold or NASDAQ or US30, what we're trading. We do have a US folder at 8:30. It is an orange folder, medium impact. It's a Philly Fed manufacturing index. So that will be released at 8:30. Again, U.S. governments are shut down, so we'll see if this is actually going to be released, canceled, or it's going to be revised. But it's not showing tentative, so I believe that this one will be released today, okay? Going into 9 a.m., we do have lots of FOMC members speaking. We have FOMC member Waller, Barr, Mirren, Bowman speaking. Okay, notice that there's 12 chairpersons on the FOMC committee. We always look at Powell. He's the head chairman. He's the one in charge of all the FOMC meetings and conferences, and he's the boss. These are the other speakers. They're going to speak throughout 9 a.m. We'll see what it says on Financial Juice to the left of me. We'll watch that, but there are a lot of them are low impact news. They could be talking about monetary policy. But we will watch that as well. And then when we wrap up our call around 10 a.m., we do have some housing markets in the U.S. news, low impact. And then we have a post New York session with Dave and everyone in the private Zoom. We have today's day 4 of our all-day IMF meetings. We have natural gas storage, 10:30. If you're going to trade in the mid-afternoon in the Eurozone, you got the European Central Bank President Lagarde speaking. Crude oil inventories will be released at noon today. And then we have a Canadian red folder. We have a speaker, the Bank of Canada, Governor McLean is speaking. Then a few more FOMC speakers throughout the day going into the close, okay? And just a reminder, U.S. government is still shut down. Today's the 16th day they've been shut down. So data may be impacted by the shutdown every single day. When we see tentative U.S. folders, these are events that are subject to delay, revision, or altogether they're going to be canceled, okay? So that's regarding today's news. And then tomorrow, guys, just a reminder, we're going to be doing a live London session. So we're going to come in at 2 a.m. Eastern. We don't have much European news, but we're going to be starting at 2. We're going to go till 5 for 3 hours. We'll look at DAX, which is the German index. We'll take a look at gold and maybe one currency pair. We'll leave NASDAQ and US30 maybe for New York. But for Europe, maybe we're going to specifically look at DAX. which is the German index, again, gold, and maybe like GBP or Euro USD. We'll throw a currency pair in there and we'll see how it's moving. So those will be our three securities maybe we'll take a look at. So just a reminder, guys, if you want to join us tomorrow, live London, 2 a.m. Eastern, join us. We'll see how the London markets are moving, okay? Earnings, guys, we had last night at 2 a.m. Eastern, pre-London, we had TSM report. This is Taiwan Semiconductor Manufacturing Company, a large, one of the biggest in the entire world, semiconductors, chips, very, very similar company to some of you guys are familiar with NVIDIA. This is one of them right here. They had exceptional earnings. They blew it out of the park. I know it's not showing here on Earnings Whispers, but they did have great earnings, okay? Now, for us, in the New York sessions, we're continuing with the U.S. financial bank earnings, okay? And then we're going to be leading into tech earnings coming very, very soon. But we have Charles Schwab reporting at 7:30 a.m. Eastern. Bank of New York Mellon at 6:35. We have KeyCorp. These are smaller regional banks. So we're continuing with the financial earnings. We have M&T Bank Corp. We have US Bank Corp. So there's a lot of financials. And if you guys have seen for the past couple days, these banks reporting in the US, the big banks, they've been destroying the EPS, the earnings per share. Their revenues, they're not just beating them or just like slightly beating them. They are destroying their revenue. They are beating them by 2 to 3x, like on average. So U.S. financial banks are doing fantastic. Stock market is trading at all-time highs. So these are doing really well. Tech is doing really well. So that's what's carrying these markets. Everyone's saying, well, how can it continue to sustain this? Well, look at the earnings. The results speak for themselves, okay? So big banks are doing something good in the United States. Tech is continuing to destroy analyst estimates, and markets are continuing to drive, okay? So we'll keep an eye on these earnings today as well. In the after hours today, we do have earnings. Interactive Brokers will be reporting at 4 p.m. Some of you guys trade with this platform. It's a fantastic platform to trade off of. They're a publicly traded company. You can invest and you can trade them as well. And then you see that there's more financials in the after hours coming out. Simmons First National Corp, FNB Corporation, Bank OZK, Liberty, Independent Bank Corp will be reporting. Okay, guys? In the news, this is what we were just talking about. TSMC profit beats, jumping about 40% to a record amid this AI boom that we're watching unfold. Okay? The world's largest contract chip maker topped Wall Street forecasts as it benefited from surging demand. So, this was a big move in the markets. If you guys are watching the semiconductors, this may, continue with like NVIDIA, SMCI, some other chip manufacturers might ride the coattails of TSMC's earnings last night. Unbelievable earnings, and they're continuing to hit it out of the park. Speaking about hitting it out of the park, Vladdy Guerrero destroyed it last night. Toronto Blue Jays finally got it together. Big win last night for the Toronto Blue Jays over the Seattle Mariners. That series is 2-1 right now for Seattle, but we're going to win the next game and we're going to tie it up, okay? So that's the American League Championship. Toronto, Canadian team is out there battling all these high powerful American baseball teams. Hopefully we can beat them, okay, guys? U.S. stock futures rise with earnings, trade war in focus, okay? There's tariff wars are back. Remember, it started again in April. Markets were extremely volatile in April, and we're continuing again with tariffs. Trump has put 100% tariffs on China. China is actually retaliating, and we'll see how that unfolds. So whenever we do have tariff wars and things like that, use proper risk management when you're trading. Odds are on historically long U.S. shutdowns grow. There's analysts saying that this shutdown might go into November. Okay, we're already 16 days in, and there's no signs of coming to an agreement and opening up the U.S. governments. So that's why gold might be continuing to move to all-time highs with the uncertainty of the U.S. government. Okay. What else we got in here? Salesforce rises as forecasting revenue above 60 billion by 2030. We talked about this last night. What is Salesforce? The ticker is CRM, and this is like a big AI company. Also, they use robots to replace humans at work. You guys probably see around your city, wherever you go, you're going to start to see more automation. You're going to start to see robots, computers taking over humans' jobs. In the next 5, 10, 20 years, we're probably going to see a lot of jobs phase out. You can already see it if you go to Walmart. A lot of your cashiers are not even there anymore. It's all self-checkout. Those are robots. Those are computers, you know. That's taking over. So that if you want to look at a company to invest in, that's one of them, Salesforce. Oil rises as Trump says India will stop buying from Russia. Nestle stock soars on sales rebound, plan for 16,000 job cuts. Guys, this is just the start. Here in Canada, Stellantis just moved $13 billion worth of production of their Jeep into the United States. So even here in Canada, we're starting to see the auto industry just like break down. You know, so we're losing a lot of jobs here in Canada. So it's probably everywhere around the world. You're probably seeing it where you're from. There's a lot of layoffs, a lot of unemployment. That could create a recession. And inflation keeps going up, guys. So you've got to be very careful with your money. You've got to be very strategic with your money. In my opinion, don't spend your money on stupid things right now. Materialistic things don't matter currently. I would recommend paying off all your debts at this time and getting financially free and not worrying about Lamborghinis right now. United Airlines also had their earnings. Their stock fell despite upbeat guidance. Why Wall Street thinks the gold and silver boom isn't done yet. This might continue, guys, you know, so just continue trading with the trend as much as you can. If you're countering the moves, you gotta know how to counter trade, unfortunately. If you don't, you could get yourself into a lot of drawdown and if you use over leverage, you could do a lot of damage to your account, okay? What else we got going on? Let's see here. Yeah, there's the TSMC Q3 profit jumps almost 40% to a record, and it destroyed the expectations. Okay, so AI is booming right now. Tech is booming right now. Okay, if you're interested in that, you look at NASDAQ. NASDAQ is the index that is tech heavy. Also S&P 500. Dow Jones is great, but it's not tech heavy. It's just an overall snapshot of the entire U.S. economy with all type of sectors. Okay, right now we have the S&P futures are up positive 0.22%. The Dow futures are up positive 0.19, and NASDAQ is leading the way with 0.39 positive. Gold is up 1% right now. That is a lot, right? It's up $43 an ounce right now and trading at all-time highs, okay? Just moving forward in our Discord, guys, we have a Discord channel that has trade ideas and trade signals that we send out on a daily basis. This was a trade idea sent out yesterday for NASDAQ, looking for buys around 24,670, and you can see it dipped all the way down, and we're looking for buys above 24,670. It came down there, nice V-shaped recovery, came right back up, and we got closing volume with a retest and started to move out for 150 plus pips. Also, commodities, a lot of you guys are gold traders. We do send out gold alerts as well. So this one was just right below that psychological number of 4,200, 41.97, and you can see it was building, it was building, it was building, it was building. You get a bar that finally closed above. There was a lot of impulse breaks of that area, but then you got your bar that closed above, and you could take the continuation or you could wait for some pullbacks. And that was running, taking out this resistance and even getting up to those all-time highs, okay? That was running over 100 plus pips, okay? If you need trade ideas or signals to help you out, we provide that as well. Everybody on YouTube, thank you guys for joining. Almost 200 viewers. I appreciate all of you guys that joined us for our Tokyo session last night, and welcome back to our New York session. There is a free Telegram channel pinned at the top of the channel. It's this one right here. It gives you all of our upcoming live sessions on YouTube, all of the links, free blogs available. I'm going to go over this blog with us this morning. The U.S. government shutdown, impact on financial markets. Right now we're in the 16th day of the U.S. shutdown. How is that going to impact the markets going forward? I just want to go over that blog with you guys. Some of you guys have never traded during a U.S. government shutdown, so I just want to remind you guys of a few tips and some advice, okay? And thanks to everyone last night. It was a fun Tokyo session. Sam Morghini, yeah, great scalp. That was fun last night. DD Nicer, he actually passed phase 1 of his challenge. Congratulations. And Mr. Father Doug over here caught 40 pips. So thank you guys. I had a lot of fun. Join this. It's a free Telegram. It's for you guys available. Has promos and giveaways here at SST. And this is a legitimate Telegram. Don't be fooled by the scammers out there that are copying this and asking you guys for money, saying if you give them $500, they're going to give you $5,000 back next week and they're going to invest it for you guys. It's a scam. We would never do that, okay? So that's why I provide this link for you guys, because it's actually us posting it and it's not a scam, okay? On our website, guys, if you want to have some education and you want to kind of self-teach yourself or go through this, you can do it, but we'll also help you along the way. There's lots of courses with whatever you need, courses on Forex, courses on price action. Some of you guys need to learn your candlesticks, price action. You guys want to brush up on your support, resistance, supply, demand. Some of you guys want to learn more about technical indicators. Some of you guys want to learn about some strategies. We have all of that available. Long form boot camps. If you need to learn more about psychology and mindset, we've got a 5-day boot camp over here regarding psychology. We're big into psychology and mindset here at SST because we believe that's what separates successful from unsuccessful traders. So that's a work in progress. I hope you guys are really working on your psychology of these markets and discipline and handling your emotions while you're in profit and in drawdown, okay? And then we have long form webinars. These things are like 2 hours plus. We have a beginner webinars, we have more intermediate, and then we have advanced webinars. And we have our super systems of trading. I'm going to start doing more of these. And we also kick off our Sunday sessions that we had one last Sunday. It was amazing. And we're going to continue doing some Sunday sessions with our lifetimers, okay? And just finally, guys, the blogs, all the blogs are available. If you go to our website, click on more, blog. There's the one about the government shutdown I'm going to talk about. This is a blog about our SST Scalper Pro and taking gold trades over 200 pips. And then, guys, I hope you guys have read or reviewed the blueprint for successful trading and your 3 principles to follow. I hope you guys are also journaling. You're adding your tools in your toolbox. And you know how to recover from trading in a slump. You guys saw me where I was in a little bit of a slump for that 1 week and I got out of it and I haven't looked back now. So we're all going to go through some obstacles in trading. We're going to go through some slumps in life, not just in trading, but we have to know how to recover and keep moving forward, okay? And you're going to go through it one time in your life, okay? If you haven't, that's amazing. But just when you do get into a slump in life or in trading, you got to learn how to successfully get out of it, okay? Because if you don't, then it could really destroy you as a trader, okay? So I just want to go over this blog, if you guys don't mind. I know a lot of you guys are excited and want to get to the charts, but we have a lot of time on today's call. It's a 4-hour call. We can pace ourselves, but this is really important. I know some of you guys don't even care about this. That's fine. But some of you guys, the guys that really want to learn about trading, I appreciate you guys. And let's talk about what a U.S. government is, because we're trading through it right now. A lot of us thought that this U.S. shutdown was going to last 1 day, 3 days, 1 week. Now it's 16 days, and we have analysts saying it's going to go into November. So let's just learn what this is. A U.S. government shutdown occurs when Congress fails to pass sufficient funding legislation or the president does not sign it, resulting in the closure of non-essential federal operations. This typically happens at the end of the fiscal year when appropriation bills are not enacted. Essential services like national security and public safety continue to operate unpaid. So this is why it's important, is because the day they did it was the fiscal year goes from October 1st and ends September 30th. So this government shutdown started October 1st, where they were supposed to negotiate the budget and start for the entire year. And they couldn't agree, both sides, and that's why we're in this shutdown right now. How long will this last? I don't know, but right now it's going on 16 days. So what is the impact on financial markets when the US government is shut down? There's market volatility. How many of you guys have seen how crazy the markets have been as of late? I haven't seen a Tokyo session like last night in a while, where you're getting 150 pip moves on gold in a matter of 20 to 30 minutes. It's unbelievable, okay? What is impacting this? It could be the US government shutdown. So government shutdowns often introduce uncertainty, especially when the US is shut down. That's a big uncertainty around the world. Leading to increased market volatility. Investors may become cautious, causing fluctuations in stock prices. For example, during the 2013 shutdown, the S&P 500 experienced volatility through overall market decline was moderate, okay? So there was another, if you look back at 2013, if you kind of want to review the securities, there was a US government shutdown at that time as well. Number two, investor sentiment. Prolonged shutdowns can impact investor confidence as they raise concerns about political dysfunction and its implications for economic growth. A lack of resolution may lead to decreased consumer and business confidence. 3, a delay in economic data. How many of us have seen this? It started with, remember, the first Friday of this month, there was no NFP. That we've been delayed now 3 weeks now of our Thursday unemployment claims, and there's nothing this morning. So they've canceled all those. So we don't even know our unemployment numbers. Remember our Thursday, every Thursday at 8:30, we have our US weekly unemployment claims. Those have been canceled now, going on 3 weeks. We didn't even have our non-farm payroll released. There's a lot of data that's getting canceled, and so there's a delay in this economic data, which may impact the way how FOMC moves, the way how interest rates move. We don't have labor numbers, so agencies that provide vital economic data, such as the BLS, the Bureau of Labor Statistics, may halt operations. We're watching that on a daily basis. We're seeing a lot of U.S. folders canceled. And it's delaying important reports like the employment figures, the NFP. This absence of data can create uncertainties for traders and policy decisions. Okay, we have an FOMC coming up with Powell. With no data, we'll see what he's going to say. So that might make for a very, very volatile FOMC regarding interest rates in the United States. Bond market reactions. If anyone follows the bond markets, they got destroyed yesterday. Bond market reactions. Treasuries might experience varying demand dynamics. While some investors may seek the relative safety of government bonds, others may worry about delayed interest payments affecting treasury yields. So you're wondering, why is gold still trading at all-time highs? If you look at the bond market, it got destroyed yesterday. So there might be a lot of investors that are losing confidence with the U.S. bond market and putting money and investments more into physical metals such as gold and silver. And how long will this last? It all depends on how long this shutdown lasts. Number 5, sector-specific impacts. Certain sectors reliant on government contracts or approvals, such as defense contractors. Defense contractors are your Raytheon, your General Dynamics, Boeing. Those are your big defense contractors in the United States. Or healthcare providers. A lot of us trade Dow Jones. United Health is a big healthcare provider. Okay, they may face revenue disruptions impacting their stock performance. Tips for traders and investors. Number one, diversification. I know a lot of you guys have heard this term, but what does it mean? It means to diversify your portfolio maybe. Maintain a diversified portfolio to mitigate risks associated with sector-specific impacts. So if you see that there's a sector that's getting really impacted negatively, maybe you got to start to diversify and start to move your capital into more appreciating sectors in the market, such as metals, junior mining companies right now. Gold mining companies are through the roof. They're trading at all-time highs right now. That's one way how you can mitigate risk and learn how to diversify your portfolio. Diversification can help cushion against volatility in any single asset class. Monitoring your developments. Stay informed about developments in Washington, D.C., as news regarding negotiations can significantly affect market sentiment and decision making. Focus on fundamentals. Despite short-term volatility, long-term investors should focus on fundamental analysis rather than making decisions based solely on market reactions to political events. Opportunities and volatility. Traders with a higher risk tolerance might explore opportunities arising from volatility, such as options trading strategies or short-term trades, while exercising caution due to potential rapid price swings. Liquidity management. Ensure sufficient liquidity in your portfolio to withstand short-term market downturns without needing to liquidate holdings or at unfavorable prices. So that's why it's also important to learn how to manage your trading accounts, guys. You don't want to go all in. You want to leave some dry capital behind in case you need to average down. But you got to learn how to keep sufficient liquidity in your account so that you don't go in severe drawdown and then there's nothing that you can do except hold the prey, and eventually maybe you get tapped out and you lose everything. So you got to know how to allocate a certain amount of capital when you're trading, especially investing as well. Number 6, consultation with a financial advisors. During uncertain times, consulting with financial advisors can provide personalized strategies aligned with your risk tolerance and investment goals. Visit your bank. Talk to your licensed financial advisors about a plan. If you are worried about your retirement account, your 401k, your RRSP accounts here in Canada, you need to talk with a professional to learn all about that, okay? In summary, while U.S. government shutdowns can disrupt financial markets and create temporary volatility, adopting a strategic approach, focus on diversification, staying informed, and maintaining a long-term perspective can help traders and investors navigate these challenges effectively. So currently, the U.S. government has been shut down for 16 days now as of today, October 16, 2025. Remember, this started October 1st, okay? How long will this last? They could reach an agreement today, maybe next week. Some analysts are saying that this is going to drag on going into November. November, last time I checked, is about 2 more weeks away. So this could be ongoing for over a month if we start to move into November, okay? So that's a little bit blog on what is this U.S. government shutdown, the impact on financial markets, okay? And you can find this blog in our blog section right over here, okay? We're going to get started now, guys. So welcome, everybody. Good morning. We need one more subscriber right now to hit nice psychological 700. If you haven't subbed yet, be that person right now. You might be that lucky person that hits that 700 sub. So we'll be at 86,700 on our way to 87,000, okay? So let's get into this. We're going to get into gold. I know a lot of you guys have ants in your pants and can't hold off, but we got to do a little bit of learning while we do some earning in these markets, okay? So are we all good? How is everybody this morning? Welcome everyone on Zoom. Good morning to everybody. Trevor, good morning. Conrad, welcome. X-Red Clues, welcome back. Hope you're feeling better. Thanks for joining. Welcome, guys. Sergio, thanks for joining again. Welcome. Nigel, good morning. Welcome. Lee, Christoph, Lady Stone, Kira, Reese, good morning, guys. And everyone on YouTube, I appreciate you guys as well. Thank you guys for all joining. Welcome, Zablon, good morning. Pravin, welcome, good morning. Thank you for joining, guys. Jay, welcome. Thank you. I'm glad you're enjoying our content, and I hope you're learning on a daily basis, Jay. Thank you. Diku, welcome. Thanks for joining. Welcome, guys. Cash, thank you for joining, brother. Appreciate the coffee. I got a coffee right here. Thanks to you. I appreciate you, brother. So let's get hit the like button if you haven't already, and let's get started. So I'm going to do a top-down analysis on gold. I know we can just jump in and start trading right now, but it's best to do a top-down analysis, see how everything is moving on the higher time frames. Obviously, everything is moving bullish on gold, but let's just take a look at it. Last night we did that Tokyo session, and I clicked on the monthly. Okay, I'm going to do it again for us right now. Look at the monthly, guys. Okay, not just this month. Look at the prior months. Look at what gold is doing. Okay, these are monthly candles. These are not 5-minute candles. Okay, so you can see right here. Started in August, very bullish month, closing near the high. Look at September, right out of there. Short wick, no pullback, opened basically ignited, popped that wick. All of September, look at it, closed right at like 99% right near the high. Again, a very short wick. Look at this month, starting October, small tiny pullback, pop that wick, and we're continuing to drive. These monthly candles, we still have 15 days to go before this monthly candle closes. How high can it go? Will it get a wick? Right now it's still driving. It is extremely overbought. Look at it. When you look at the RSI indicator, I call this the really silly indicator because this thing can get us in a lot of trouble. It's been showing us that we should have been selling gold since the beginning of June. June, guys, okay? June, July, August, September, October. Look at right now. It's overbought. It's at 93 on the RSI scale here, and it's still driving. The reason why it's moving all-time highs like this, it's not just buying gold. It's a lot of short sellers are getting squeezed right now. They've been shorting and shorting and shorting, and they continue to hold and draw down or are getting liquidated right now. So they're trading against this trend, and gold keeps moving. If you look at these months, they tried to push it down. April, it came up, and look at the wick where they brought it right back down. The following month of May, again, it was bullish. It came up there. They rejected it back down to the opening price. The next month, June, was bullish, and you see they rejected it a third month in a row, but could not break below the opening balance. The next month, July, it came back up bullish, and again they rejected it back down where we closed bearish right there. But right here, the month of August, that should have technically opened bearish, and we should have been filling those wicks, and we should have seen gold selling off right there. But there was so much uncertainty going on around the world that gold continued to pump, and look at it closed above all of those summer months of like sellers pushing it down, and then we just kind of blew right out of here. So we're trading at all-time high territory. How high can this go? The sky's the limits. Just use your psychological numbers. Right now we're trading at basically 4,250, okay? And if you dissect these monthly candles, you go into the weeklies are driving. Look at like every single week, guys. They're basically ignited weekly bars making higher highs. You got another one, September 22, ignited weekly bar closing near the high. The next week, September 29, ignited weekly bar closing near the high. The week of October 6, ignited weekly bar continuing to close near the high. This week, ignited weekly bar continuing. Are we going to close near the high? We've got one more day and one more hour to go, okay? So if you're thinking of selling, look at what you're selling against, right? You're selling against a train right now, and it might run you over and destroy you, okay? So I don't see one weekly bearish candle engulfing or closing below. We had some right over here, but you see they just were short-lived, and then they went back up. Here was another weekly bearish candle, but then two candles engulfed it, and this is where we're just breaking out. So right there, if you look at the RSI on the weekly, the weekly is trading at 85. So it is overbought right now, but it's still driving, okay? So if you want to consider selling, look at what you're selling against, okay? You can also start going into the daily. Look at the daily candles as well. These things have been overbought since starting of September, right? Look at it. We're trading at like 85, 86, 87, and they're still moving. There was only a small counter pullbacks. But if they're making higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low, new higher high. So guys, if you're looking to sell, look at what you're selling against. Just, sometimes always look at the higher time frames just to keep you in check. Yes, you can scalp some sells, absolutely. There could be 5-minute candles that just go down for about 50 to 100 pips, but you got to be disciplined to either go take your stop loss to a break even, take some profit out, because you could be selling right into where big buyers are patiently waiting to buy a pullback and take it back up. Okay, we've seen that all in the Tokyo session, right? Now, let's make some sense of these daily candles. This is where normally I start my analysis. I just want to briefly get you guys understanding that that was a big previous all-time high right at 3,500, that psychological level. And there was this block where we were accumulating all April, all May, right there. That's where it hit a double top, where it came in from that previous all-time high, went back down, came in a second time in May, April, May, and double top and drop. We came back in here in the month of June, back down. We revisited this in mid-June, again, right there, push back down. We came in here again, end of July, back down. We revisited this in early August, back down. Finally, it closed above right the last day of August, and you see how September, as soon as it closes above, that red zone, turn it green, just like we do on all time frames, and stretch it into the future. If gold ever retraces back down to 3,400, I'm going to buy. I don't know about you guys, but I'll be buying gold if it comes back down to 3,400. That's a great discount from 4,250. That block is a block in the market below us, okay? And now you can see how we've been redistributing the volume since we broke out of there, okay? Where do we have other zones now to identify? We're trading all the way up here. This kind of zone down here is irrelevant right now. But what I do is try and learn to train your eyes to look at maybe consolidated volume or flag patterns, okay? Right over here, like these are all single bars that are continuing to move up, single bars. Right here, we start to see daily candles start to consolidate right here, 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 here. So this is where, when you start to see volume start to consolidate, that's where you can start to draw your zone, right? We've been doing this. If you can go back and watch all of our videos, I didn't just start this today. Okay, sometimes I tell you guys it takes 2 candles where you can kind of identify where the volume is, and if you get 3 candles, you figure it out a zone. Just continue stretching it into the future, and then you can see when we broke out of there, it's got a high probability a bull flag will continue to break to the upside, which it did here. It also pulled back. Those were 2 bearish days, but look, it came right back in that zone and continued to move back up. So stretch that zone into the future, right? Let's just continue to identify zones and stretch them into the future. Right over here, see when we moved up, see where we got a bullish bar, bearish bar. These 2 bullish bars were equal to that bearish bar. So that's where I kind of trap that volume. Exactly like that, right? And stretch into the future, okay? This is where you can start to stack bars on each other, okay? See this big black bearish candle? See this blue candle? Open, close. If I stack this one, if I could move this candle right over here on its wick, these 2 blue candles are exactly the size of this black candle, right? So there's your trap. And then there's the volume, continue, bull flag, high probability to the upside. Again, we start to see some consolidated volume. Over here, we have 2 small bodies like this. You can trap it like that if you like, but what I see here is, again, this bullish candle that broke out. See where it closed and the next one kind of opened, bullish, ignited, and continued to move. I'm going to pull this zone right up to that bullish candle because I know that there's been no retracement inside here. So I still want to make that zone that's been has not been transacted in yet. So there's another zone. You can see how many zones there is leading up to the all-time high and below us, like right here, right here, right here, and that big one. Obviously, the ones below, the deeper you go down in the depth of market, the more that these have stronger confluence, okay? This one is good. This one is stronger. This one is the stronger than, but this is the strongest one, right? So we're continuing to move. Here was another one where we were consolidating right here, where you've got a bullish and a bearish. Bullish candle, bearish candle, bullish candle. Again, there's another zone right down there. And now we got single bars just moving. There's a single bar, higher low, higher high, close. Ignited move, higher high, close. Pull down, higher low, continue to trade with a new higher high. And then you see we don't have any consolidation like we did here, like we did here, like we did here. Now it's just single bars continuing to drive. So we got to make some sense out of these. Where can we see maybe something? What I would do is I would look at this candle right here, Wednesday. It's got a lot of volume in it, okay? So I would maybe basically identify the point of control of Wednesday's volume. How do we do this? Grab your Fibonacci tool, opening price of that candle, closing price of that candle. Identify where's 50% of it. There's 0.5 right there, 4,175. Draw a yellow line. And then what we can do with our Fibonacci tool is the 1 ratio above and the 1 ratio below, okay? It's either 618 or 382 or vice versa. You might have the 382 or 618 reversed on yours. Regardless, I'm not looking at what the number is here. I'm just looking at that zone, okay? So you see how now I found the point of control of Wednesday's volume. I stretch that into the future, so it gives me a zone to work with in case we pull back into that point of control, right? If we lose this point of control, then we're going to revisit right here. The closing balance of Tuesday, opening balance of Wednesday. If it continues to come back down, I would be looking at 50%. If that doesn't hold, then we're going to come back to this point of interest where we closed on Monday this week and where we opened on Tuesday. So I can see how strong our weekly is. Monday opens the week. There's Monday. Tuesday, higher highs, higher lows. Wednesday, higher highs, higher lows. Today, higher high, higher low, okay? Are we going to continue driving or is it going to pull back down into here today, okay? So you see how I identified that zone? Stretch it into the future, right? We might come back down and test this thing. So if it comes back down, maybe we test it, maybe we go back up. Maybe it comes back up and then there's like a double top up there, then we're coming back down. Then will this be a double bottom or are they going to break it down, close it below, we flip it red, then we're coming down, test this and maybe this, right? Then we can start to naturally break down a little bit. But right now it's still very bullish. So let's follow this volume, right? On Wednesday, we pushed up, we made that new all-time high, and then it got rejected and closed right there. So let's find our closing balance yesterday and opening balance. This is when we did our future session. Remember when we were trading this, guys? We did this. So look at, we opened, we were initially bearish today, bearish. There's our lowest point of the day, the wick. So that's our lowest point. I'm gonna place a purple line at our low point right there. Look at the number 2, guys, okay? So we talked about this last night on our Tokyo session. Psychological numbers. Look at today's lowest point. 4,199.30 cents, okay? So it's kind of like a Walmart price where they rolled it back. They could have easily had it at 4,200 exactly, but they're giving us a little bit of a discount there because look at it, 4,200, right? Look at the next psychological area on Wednesday's mid-body, right at 50%. 4,173.34 cents. Round it up to 175. There's 175. So you can see how a lot of these psychological numbers play into effect in these markets. So we opened, it was initially bearish, buyers came in. So you see we haven't transacted down into here. Higher low, they brought it right back up to the opening balance and buyers were strong. We bought this last night. When it started in the futures market, started pushing out, we identified the previous all-time high right there, which was the previous day's high, 4,218, and we closed above that, and then we used 4,218 as 5-minute support, and we continued to drive up, okay? So this is now a yellow line. It's a point of interest. It was a fresh high yesterday, which was resistance, and now it might be support going forward. We're all the way up here now. So if it pulls all the way back down, that might be support today. Why? Because then it's protected the opening balance. All of these buyers now that are pushing gold up, if it does retrace, maybe they want to hold support there so it doesn't come all the way back down to the opening balance and lose that, then the candle flips bearish, and then we break our low, and then we're starting, sellers are in control to drop it back down into here. So right now, buyers are still very strong. See how they're pushing it up? Not only did we break the previous all-time high, we destroyed it. Look at gold. It is continuing to go up. Bullish, 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 bullish. That's our highest point today, and that's a new all-time high of gold right there. The highest wick, I'm going to place an orange line, okay, to represent all-time high. It's 4,243 right now, okay? That's our new all-time high. There is a little bit of a rejection pushing back down, okay? But it could just very well come right back up there and continue to break out. If we do break out from 43, I'm going to place a yellow line at exactly at 250, okay? Just so I can have that psychological number, 4,250. What I could also do is draw a red box from 4,250 to our all-time high right now and make it red. Just to see if we do continue to come in trade in here, will this be a red zone and continue to push it down today, okay? If we continue to break out of here, then this is all-time high territory, price discovery. How high can gold go? It all depends on what type of trader you are. I'm a scalper, so I look at more $5 moves on gold from 250 to possibly 255, a 50 pip zone. I'm happy with getting 50 pips. Some traders, it's not enough. You got then increase your zone from $10 increments. Go from 250 to 260, right? I'll show you like this. Go to 260 and draw a yellow line. Then that's a 100 pip zone, $10 move, okay? Psychological numbers, 250, 260. Next one, you can go to 270 if you like. But what I would do is I would bump it up to that 275, right? That nice 25, 50. See how I have right over here? I've got the 50, the 75. Then the next one would be 4,300, right? Those big psychological numbers, okay? Those are if you're a bigger trader, right? But you can stick with your $5 moves, $10 moves, whatever you like, okay? That's above us. So you got to kind of think about if it continues to go, where could it go? But the way how to do this, guys, is either use Fibonacci extension tool, Fibonacci retracements, or psychological numbers and zones, okay? Now, one final thing I want to do is maybe find today's point of control of this current candle. I know we have 10 hours left and we're nowhere near closing, but if I can kind of figure out with the Fibonacci our opening price and the current volume right now, I know it's fluctuating, so this is kind of like an estimate that here's 0.5 of today's current volume right there. Okay, and then if I can you see how I kind of used yesterday's previous high. So see this little body of volume? Maybe if that pocket right there, if we trade back in here, maybe our daily buyers are inside this pocket to protect gold to continue to hold it up, okay? If we lose this pocket, then we have a high probability that we might come back down and trade down to our opening balance, okay? So you see how I identified that pocket right there? I just went from Fibonacci from opening to the current price. I got that line. I'm using this line from previous daily high and just chopping in that volume right there, okay? So I got now like some zones to work off of. Right now, it's still very bearish. Now let's break down this daily candle in the 4-hour bars, okay? So we're gonna start dissecting this and see how it was moving in Europe, see the Asian session that we traded, right? These are the 4-hour candles now. So they are continuing to make higher highs, higher lows, higher highs, higher lows. Now we start to see, here was 6 p.m. when the candle opened, 6, this was representing us. We started trading at 7 p.m. We ended the call at 8:30. So we were part of this bullish 4-hour candle that was coming all the way up. Now I can see where it closed. It closed right there. Next 4-hour candle, 10 to 2 a.m. opened, made a new all-time high, got rejected right there, and came back down bearish. Look at it. It came down bearish engulfing. But then look at Europe right here. It should have opened bearish. Look at the wicks, okay? See, they're kind of equal lows. If you look at now where we closed right there and where we opened in Europe, they didn't break right there. So we got 4-hour equal lows holding up the market. And then all of Europe was very bullish as well. This candle's closed bullish engulfing, okay? Look at it. Europe, 2 to 6 a.m., pushed up. This is representing pre-London, London, Frankfurt, Switzerland, all of those exchanges opening up in Europe. And look how bullish it was. Not only did we come up, we got to 50% of that bearish candle. It came above it. There's points of interest. So see here, I got a 4-hour candle that closed, a 4-hour bearish candle that opened. I'm going to place a white line right here. okay? Because I want a 4-hour point of interest. Anything I do on 4-hour or 1 hour, anything to do with an H beside it, I use a white line. So I can see, look at the psychological number, 4,230 and a quarter and 25 cents is now could be our hourly support holding before we get back into that bullish point of control, that zone right there. So that was resistance, volume closing above on the 4-hour, turn this white line into support, right? Look at how bullish it was. We got all the way up there, but we couldn't break for a new all-time high. Tweezer top highs on the 4-hour. And then it got pushed down a little bit. There's our close. And now we're opening up our new 4-hour candle. This is going to represent pre-New York. It's going to represent COMEX. It's going to represent a little bit of Wall Street. This candle opened at 6 a.m. will close at 10 a.m. You see how there's 3 hours and 6 more minutes to go? It's a small bullish doji candle. It opened. It was initially bearish, bearish, bearish. But you see how it's produced a higher low so far above this white line. We have not came and touched this or to see if this is going to be support, and we haven't came down into this zone as of yet. So right now it's coming back up to the opening balance, and we're breaking out. So it broke these. We have a new all-time high right now in the market. Now, will we cut through this and get up to 4,250? As a scalper, what I would be looking for is maybe exactly half of this zone. Let's see if we can get up to 4,246. From where we are now, I know it's only like 40, 50 pips away, but that would be a nice little scalp inside there to see and test this all-time high, see if this is going to be a supply zone, see if we can cut right through this, and see if we can continue breaking up to either 250 today, maybe 260 today, okay? But right now, it's still very bullish, okay? So it was barcoding, bullish, bearish, bullish, engulfed it, closed above it, and we're continuing to move up, okay? Now, let's start to dissect this in hourly candles. Let's go to the 1H. Now we see a little bit more patterns. You know where we were just barcoding on the 4 hours? Now I can see how it came up right here, very bullish. Came up, we came back down bearish. Right there, 2 a.m., that's pre-London. There's London, 3 a.m. 4 a.m., 5 a.m. So look at now we're coming back up. So is it going to come in here? Maybe be like a double top like that and start pushing down. Maybe that's why we come into this green zone. Yes, it could go right back up. But what happens if we lose that green zone? Then we're coming back there. There's your M pattern. Maybe they're going to grab some liquidity there and bring it down. If we close below like this, then hourly we could sell down in there. But right now it's still very bullish, like it's making that higher low. So I see we tapped into here at 5 a.m. Continue to push up, pull back, higher lows, continue to drive. Now we're going to see this hourly candle is going to close in 4.5 minutes. Is it going to continue close? Are we going to go into 7 a.m. and continue to break out of here, or are we going to pull back bearish a little bit? Okay, so right now we're trading into that upper supply. You can see it's still strong on the hourly. Let's go into the 5 minutes and take a look at this. These are our 5-minute candles. So you guys remember we were scalping all the way back. Where were we scalping? This was us. This was us in the Tokyo session. We waited for this. There was 8 p.m. open. We waited 8:05 for that bullish engulfing candle. And this is where we bought right here. And we took it up for the whole move was 150 pips. It pulled right back down to our entry and then continued to drive, pulled back all the way down. Look, and then it revisited the opening balance again. This was 2 a.m. Pre-London. And since then, continue to go back up, higher low, get back up there, had some resistance on the 5 minutes, pull back in that green zone. Now we just broke back out, okay? So it is still very, very strong right now. Even on the 5 minutes, we can draw a trend line. Let's start a trend line from right here, connect it from point A to point B, okay? So I can connect the wicks. I got the wicks there, connection from A to B, and just continue extending it into the future. So I can see that we're still trending up right now. Now we're approaching this big zone up here. So let's see if these 5-minute candles can continue to cut through this, maybe close above and move further, or they're going to get rejected and come back down. We're getting to the overbought condition on the really silly indicator. but it could continue to drive right through there, okay? We also do have a little bit of support on the 5 minutes already being established, kind of right here. 50% of this big bullish candle at 5:55 going into 6 a.m. You see it came down, impulse, volume close above. Impulse, volume close above. Impulse, but they did create a lower low impulse, but volume closed right back above it, and now we got this line coming up. You can see if we look in the past, like right there, where it was resistance right there, now turn to support, okay? So I want to kind of keep this red line at 50%, but I want to show you where we have a zone, okay? So right below this red line, right over here, you can see that there was a zone in the market. Right there, you can pull it down to the bodies, and you can see it was red right there. Again, pulling it into the future. Now that body closed above, so we can flip that zone green on the 5 minutes to show you that when we came in there, it went back up in that green zone. Came in there, went back up, and continue. Are we gonna, if we go into a sell, for example, like let's say we sell and it comes all the way down there, you got to understand it could come right back in there and go right back up. Right? So that's why I like to measure my moves. If, for example, if I'm selling this white line to come all the way down there, that's a 100 pip move. It could come down 100 pips and go right back up, okay? So you got to understand that where you're trading into. Yes, it could maybe definitely break and close below, then we're going to do the same thing. We're going to flip that zone, the green zone red, might come back in there, and then we start pushing down, right? But you see, the sellers have tried already this morning to break this thing down, but when they come down, buyers buy it right back up. There it broke down, buyers brought it right back up, and we've been retesting this and getting right up there. We're going to go into a new hourly candle in the next 53 seconds, okay? So let's keep our eye on this, and let's see what happens here, okay? Welcome, everyone. Good morning. How was that analysis? Did you guys understand the analysis? I'm going to add our daily bar indicator so we can keep an eye on how bullish we are today as well. So that was our opening price. We had our already a low already established psychological number, 4,200 exactly. We moved back up to the opening price. We just drove right there. That's the highest point, all-time high right there now, 4,246. Remember that white line I just placed up there, cutting that red zone in half, and now they're rejecting it back down. Where will it close? If it closes below this red box, 7 a.m. might open bearish and come back down, okay? So it's already got a wick closing in 7 seconds. Get ready. I just want to check my spreads real quick on gold. My spreads were a little higher last night in the Tokyo market. Right now, my spreads are 0.7 right now. Okay, so you see how it opened, retested the red zone. Okay, so we might get a bearish leg pushing down. However, we could stay bullish and continue to transact in here. I'm going to add some EMAs for you guys. So the 9 EMAs, this green line, we're still above it. The 200 EMA is all the way down here in this bullish zone down in here, right at 50% of that green zone, okay? So it's still bearish. What are you guys' thoughts? What is your bias? Like, I'm talking now on the 5 minutes, like right now. After doing all that charting, do you think we're going to come down here, or do you think we're going to continue to go through this red zone? I don't care if you're a swing trader and you think gold is going to 7,000 in the next year. I'm talking right now, like in the next 5, 10, 15, 20 minutes, okay? Down. Okay, perfect. So you think it's going to go down. So you can sell this candle right away, right? You're going into a new hourly, but it could just come down and go right back up. Let's see maybe if we see a bearish engulfing candle, right? Because it moved, unless you just want to get in a quick scalp. Okay, let's see if this bearish candle can engulf this bar or maybe that bar. See how it just came down? It's got a wick going right back up. Okay, so I'm going to wait for maybe the first 5 minute bar to close. Smoke Nation, good day, Ron. You've managed to pass your FN 5K P1 challenge, about to kill P2 with our guidance. Amazing. Congratulations, brother. Just if I can give any advice for anyone in a prop firm account challenge, take your time. A lot of them have no limits. Before, back in the day when we were trading them, they had a 30-day, you had to pass it in 30 days. So traders were rushing it and making some silly mistakes. Now a lot of them have no limit on them. You can take 2 months if you have to, right? Don't rush it if you don't need to, okay? Look for good quality setups. Whether it takes you 1 month or 2 months, at least you'll pass it. At least you'll get funded. Maybe you'll get your first payout, right? Take your time with these things. Anything you rush something, you might make some critical mistakes, and you could cause damage to the account. Yeah, Azul, you remember that, the 30-day limit. Like, we had traders go down to 20 days, and then they started rushing it because it would expire, and then they weren't trading. Like, that's not normal trading, right? Whenever you give yourself limits, I was always saying that when I was doing that. I was in that MFF account myself with my Forex funds. I was saying, this is stupid. How can they give you these limits? A trader should not have limits when you're trading. You should be able to take a day off when you want. You know, if you had a bad day, take a day off. But you can't really do that with these accounts that expire. So you got to take your time. If you have a shitty day in the market, you've got to take maybe 1 or 2 or 3 days off and recover. When you were rushing it, it just goes against everything in trading, right? It's not natural. Trading should be natural with no expiry date, no limits. We're not trading options. Okay, so this is a bearish candle. It's going to close in 1 minute and 15 seconds. So far we traded into that all-time high supply zone. I put that yellow line I showed you to represent exactly 50% of that red zone. It got rejected right there at the close and continued push down. So let's see if we get an engulfing bar. And again, if we look for sells, we're trading against the trend, right? So if it comes down, guys, got to know it could just come down. You get 20, 30, 40, 50, 70 pips. You got to know to bring your stop loss to break even, scale out a little bit, because it could just come in here and go right back up, right? So, and if we're selling, we're counter trading. So either we wait to buy pullbacks, or if we sell, we got to know what we're doing here, okay? Here's the close. So it's bearish. It's already engulfing that previous volume. It's already engulfing this bar right here at 650. It just got down to the 9 EMA right there. Okay, so it's a big bearish candle. If you took this right away, you know, like at 7 a.m. when it opened, you're up 30 pips right now. I would be at a break even if I was in on that candle. Let me get my cut line because it's going to close. I'm going to say that that's about 50%. There's the close. So open bullish. Are we going to come back in and trade into 50% right here? Or is it just, yeah, there it is, bullish. Okay, so let's see when it tests 50%, the point of control. I just cut it right in half. Okay, so it should technically, if those sellers are strong, it should get rejected right there, and they should be able to manage this bullish volume by pushing it down. However, if this is a bullish candle, it might break back above there, and then you see we're barcoding. Where it came down bearish, it might go up bullish. See how it's coming up bullish right now? That's why I was saying, guys, if you were in that candle, 30 pips is a great little scalp. You know, that's why when I'm scalping single bars, you got to be fast, because see how fast it comes back up bullish, and now it's testing that opening balance. Okay, so that was, I was looking for it to get rejected, to come back down and maybe continue selling, but you see how the buyers stepped right back in. Okay, so we are kind of like just consolidating. We're still barcoding, whereas bearish, now we're coming back up bullish. Will this bar take out that high, close above here, and are we going to continue with keep going to all-time highs, or are they going to reject this volume down? Okay, that's what I was saying, guys. If you took a sell on that candle, it's 30 pips. That's why I said I would be going down to a break even. You guys know me. Sometimes I scale out 80% when it's going down, and I don't play this game with this would have, should have, could have happened. Okay, you got to be very automatic when you're scalping, especially when you're counter trading. Okay, that's what I mean. If you don't have this type of discipline, don't counter trade. I'm telling you guys, you have to have the proper mindset to sell against the trend, just like you have to have the proper mindset to buy against a downtrend. The bullish trend, Lady Stone, is very strong. It's unbelievable. It's very strong. Okay, so that's a big bullish candle coming back up. I want to see if volume will close back above here. I'm not in a trade, guys. I'm just, you know, watching what's going on here. We have a lot of time today. It's 7:07. We still have an hour and 13 minutes until we hit COMEX. So we have a lot of time to maybe look for a potential trade leading into COMEX. Lazy, 9 weeks straight of green candles. It's unbelievable, unbelievable. And a lot of those weekly candles opened all ignited bullish, and some just had a tiny wick to draw. So it wasn't even like, it was very strong. Look on your monthly candles how strong they are. So you see how they can maybe fake you out, like start 7 a.m. bearish, and then right away they pull you right back up. So you gotta be disciplined counter trading, okay, guys? And there's nothing wrong if you get a break even. I know a lot of you guys, you know, get emotionally concerned about a break even. Break even is good. If you were in profit and you still brought your stop loss to break even, that's fine. If it came back up and hit your break even, that's better than being in drawdown and losing money, okay? So anytime you get a break even, in my journal, in my books, in my mindset, a break even is a winning trade. As long as you don't lose your money, your capital. It's not an L. An L is when you lose your capital. Break even, you didn't win, you didn't lose, but you learn. You learn. It's an experience where you learn. Okay, so see how bullish it is still. Let's see if it will fill that big wick, take it out. That white line is that point of interest right exactly at 50% of this red zone. And you see how I marked it. It was the previous, this high right here, all-time high, and that just that psychological number, 4,250, cut in half. Okay, so I'm just going to move this down right there, showing where our 5-minute support is at these bodies. So it's still holding up. Okay, we might consolidate here. We might flag a little bit here. We'll get to NASDAQ and US30 in just a little bit. Let's cut this blue candle in half. It's bullish engulfing, opening, closing balance. If I cut it in half, I'm just taking my cut line to right there, right? That's the approximately 50%. So it opened bullish ignited right now. So are we going to see it pull all the way back down? Maybe retest 50% of that bullish candle. The 90 EMA is creeping back up to it. Is it just going to hang out here, maybe turn bullish and just start filling these wicks and produce a new all-time high? Or is it going to retrace down? So it is currently still holding. It's still holding bullish, still holding. Okay, so candle bar flipped, the opening balance black now. So will it push down right there? Will it get a wick right there? That was that previous all-time high. Will it hold as support right there? Or will it come down, trade into 50% of that body? So right now it's still holding. It could flip blue right back to its opening balance, and maybe it could continue to push back up and drive through here. But right now it's still black. Let's see if the sellers can bring it down just a little bit further down and test this 50%. Okay, you see how it's just still holding that small doji candle. Wow, okay, this has been like a 2-minute candle where look at the range, how small it is. So it's coiling up, it's consolidating. This is what a doji candle is. Very small range, just virtually sitting right at the opening price. But now sellers are maybe accumulated a little more and now maybe going to bring it down. I want to see how it will react if it gets down to 50% of that bullish candle. Okay, so far I got a higher low. Will it test in here, or will it hold with a higher low? Okay, so we got that bearish candle coming down. I don't like trading when it's kind of like barcoding, where it's bearish, bullish, bearish. I want to continue either trading with the trend, which is bullish, or I wait to see who accumulates more in a situation like this. Okay, so you guys understand why that red line is right there. It's representing 50% of that big bullish engulfing candle. Will the sellers sell right into there? Will the buyers be there to buy that discounted pullback and maybe push it back up? It might not even come to the red line. Maybe it produces its wick right there, higher low, and it's going to revisit the opening balance of this candle and maybe continue to push out. Okay, I also look at the time on the candle. We have 1 minute and 50 seconds to go, so we're getting to the close of this candle. Still technically holding bullish with that higher low, but we do have bearish volume inside the candle. "90 seconds to go. It's coming right back up to its opening balance. Could technically flip blue, fill, and drive. Yep, red clues. We have a new 15-minute candle opening in 1 minute too. Maybe we can take a look at our 15-minute candles as well. 15-minute candle is showing indecision right now. So maybe we'll see where it will close. Will it still close with some volume above the previous bar? Will it turn bearish? So right now we've got a little inside bar. You see how it didn't take out a new high and it's got a higher low. So it's kind of like inside here. The 15-minute bar is kind of consolidating itself. So next 15-minute bar could bring down bearish momentum. However, if we hold up here, maybe it might open bullish and continue to fill these wicks and create that new higher high. So right now, 20 seconds to go. We have a bearish spin top on the 15 minutes. So let's just see how it will close with this 5 minutes. See how it's coming down now? It might retest that 50% right there. Here's the close in 5 seconds. And a new 15-minute candle is opening in the market as well. Okay, so it did close below that red box. So this could open bearish and continue to come down. Maybe test that 50%, that 90 MA. If you look at the 15, closed, bullish spin top. Now we just opened bearish. Will it come down on the new 15-minute candle a little bit? Will it flip and go back up? So it's bearish coming down. I like to watch on the 5 minutes myself personally. So if you're kind of looking to sell now, you're selling with maybe some 15-minute momentum. But we still haven't tapped into 50% here. If we want to continue to trade with the trend, we stay bullish, right? We're looking for buys. But the candle hasn't flipped blue yet. Still bearish. And if we look for buys, then we could be riding the 15-minute momentum to fill these wicks and continue to break for new highs. Official radio, can you enter? Can you enter in what? You got to be more specific. In a buy or a sell? You just said, can you enter? What are you entering in? Okay, so we came close to tapping into 50% exactly right there. So it's, a little bit above, a little bit below. If I was finding that bullish point of control of that bullish candle, okay, so it just hit right into it. Okay. I'm going to buy this candle. I like it. Hammer, tapped into the bullish point of control. So I'm going to look to see if we can, you know, fill that wick, get to that white line, and maybe break a little higher. So I'm in a buy on gold. I want to see if this can continue to hold. That bullish point of control, what I just talked about, what it tapped into, if you get the Fibonacci from the opening price, closing price of that bullish bar, the little bit above, little bit below that 50%, what I was just talking about, just tapped in right there, the 618382 zone right there. So there's the 50% red line. I'm in a buy on gold. Tapped into that bullish point of control right there. But it's got a lower high, lower high, lower high. So I kind of want to see it break, you know, for a new high. Because it's got these that trend coming down just on those 3 bars. Okay, so I want to see it break for a new high. And then if it fills to that previous all-time high wick, it could go up 25 pips. And then maybe that's when I'm going to start reducing risk. If you can get up to that white line right at 50% of the zone, then it'd be about 30 pips. Okay, that's when I'll be reducing my risk. Okay, so we got 90 seconds to go into the close of this candle. We're barcoding, bullish, bearish, bullish, but we haven't created that new higher high yet. Okay, so we got to create that new higher high and get it through there so we can continue with the higher highs, change up the depth of market below us, maybe strengthen up this zone, so maybe we can get one more candle to continue to fill. If we look at our 15, this is that 15-minute candle that just opened up, tapped into that zone. So let's see if we can move up with this 15-minute candle, just fill that prior wick right there. So we're watching on these 5 minutes. Closing in 1 minute, guys. It's not easy trading at the all-time high zone, but we want to continue trading with the trend. The trend is our friend. There's a lot of sellers up here, so even if we get a little short squeeze, that's all we need. Here's the close in 20 seconds. Okay, good, we got a new higher high. Good push. Let's see if we can close above these bodies. Okay, we got that higher high push. See how it created that higher high? And as soon as it created that higher high, it got rejected because there's sellers up here, right? But let's see closing balance. Ooh, they rejected it right near the end, 3 seconds. Let's see if we can keep a little bit of volume above this bar. So we did close with a little bit of blue volume. So we're testing 50% of that blue volume right now, okay? So we got the good rejection right at 50% of that previous bullish candle, right there where my cursor is. So let's see if we can continue to ask and trade up here and continue maybe to climb our way back up here, okay? But there's a lot of sellers here, right? There's a lot of sellers, okay? So as long as we can get higher low, perfect. We got that higher low. We're back to the opening balance. So let's see if we can just fill that prior wick. Not too far away. That's 4,245. If we can fill and then get up to that previous all-time high. Now we're barcoding, we're flagging. Bullish, bearish, bullish, bearish. If we have to come all the way back down here, we still have this ongoing zone. My stop loss is just below it, right? Hopefully we don't have to incur any drawdown. We can just start to, fill and break through here. And then, like I said, if it goes up 25, 30 pips, take stop loss, maybe bring it below this zone and get it to a break even as much as we can, okay? Let's see if we can continue to ride this 15-minute momentum on this bar. Going in 8 more minutes to go. Can we continue to fill right back up there? Just need a little bit of volume to come in the markets, and then we could get right through here. So we got a beautiful retest, right? In the bullish point of control of that candle, right at 50%. Just got to continue to ask and fill that wick, create a new higher high, get up to that one, and maybe come right trade into 50% of this big red zone, okay? Good bar. Those are the equal highs right now. Those are equal highs from the previous bar. Oh, see that equal high rejection right there? That's what I hate when I'm in a buy, those equal highs. because I know that there's a big seller there holding the market down from creating that new higher high. So it got rejected exactly at those equal highs. So when that happens, sellers pushing it back down. They didn't allow it to break above there. See those two equal highs right there? 4,245 and 22 cents. That red line equal. So there's no new higher high, therefore they're pushing it back down. So what we got to do now is we got to pick up our volume below us. We got to see if our opening balance is still strong. Our opening buyers are still there, maybe adding positions, and maybe we're going to try to come back up and take out that resistance one more time. Okay, so are we filling back up our opening balance? It's trying. It's got this indecision candle. Okay, so you see every time we tap into the opening balance, there's some buyers that continue to ask up here. But we got to see if we can continue to come up this wick. If we lose our opening balance, it's going to come down, maybe come down to low, and then it's going to come down a little further, okay? So let's see how we're going to close. We have another minute to go. Let's see if we can close strong going into the close, and if we can continue momentum to break out of here. We're in this flag right now, where it's flagging. Where's the volume when you need it? There we go, right back to that equal high. Oh man, it didn't break it again, okay? I'm a very technical trader, so to me, the buyers are still weak up there, so we just got to get up there and break it. Produce that new higher high. That changes the entire order flow of the market. If we can't break that, then more offers are going to come down and try and sell the next candle down. Good, we broke it, see? Okay, so it just broke. Got rejected right away when we broke it, okay? But that was good that we broke. We have to break higher highs in order to continue to move up. Remember, higher highs and higher lows. Came back down after we broke it to the opening balance and refueled. We have an opening bullish ignited bar that just opened. Let's see if we can hold that ignited open and continue to fill. It's still ignited there. It just flipped black. So now we're coming back down. Again, we're in this flag. I don't care. As long as we flag and we're producing higher lows, I'm okay with that. We got our higher high, we got higher lows. Now we just got to ask, break back above there, and then maybe we can break out of here. That is the all-time high right there. So we're not too far away from the all-time high. We're trying to continue to break for an all-time high. And I would love if we could break through, get to this white line, go to a break even up 30 pips, and then maybe get up to 42.50, that nice psychological area. That would be a fantastic scalp in my opinion. Okay, but right now it's about 15 pips. I know some of you guys are not looking for 15 pips. Maybe it's not enough for you guys to get to a break even yet, but we should be going up 15 to 20 pips very, very soon. Okay, there we go, 25 pips. We just broke for a new all-time high. You see it's above that wick right there. So, but my target is that white line. That's exactly 50% of this zone, up 25, 30 pips. When you get up there, go to a break even if you want, or reduce risk and bring it below that green box if you like, okay? We should be now reducing our risk in the trade, everybody. Listen to what I'm saying. Okay, see how I reduce my risk? I'm just below this green box now. I was all the way down here. Now I'm right here with my stop. Okay, so that's a big rejection. Coming back down. Can we get now closing volume above this red line? We want to make this red line, which was resistance before, we want to kind of make it support going forward. We got 3 more minutes to go. Again, our 15-minute candle is building. That's why I want 5-minute volume to close above this red line. because then our 15-minute can continue to build. If we close below this red line, then we might lose this balance, okay, this volume in this 15-minute bar. So they pinned it down, coming back down. We have to be very careful up here too, because we're trading at the all-time high supply zone. I wish the volume was like Tokyo session. You're right, Bado. Yeah, that volume in, in Tokyo was unbelievable yesterday. The 5-minute candles were like 50 pip candles. We'll get to NASDAQ, guys. We'll get to NASDAQ. We'll get to US30. And we're also going into 7:30 in the next 2 minutes, guys, okay? So, unfortunately, like a new 30-minute candle opens the market. Momentum can change. Could be bearish coming all the way back down. Unless we can close strong up here, maybe we'll get a little bit more momentum going into the next 30 minutes. I've reduced my risk. I'm right here, my stop loss, okay? So I'm still in this. It's in profit, but I've reduced my risk. I'm not at a break even as of yet. I wanted to tap into that white line and break it to go to a break even. I'm not there yet. Welcome, Dale. Good morning. Thanks for joining. You closed in profit. Good for you. There's nothing wrong with that. Okay, so this is a shooting star candle coming down, man. And then the volume might close below that red line. So opening at 7:30 might continue with this momentum to come down, okay? We've got 45 seconds going to the close. So let's see if we get any last minute buyers stepping in here. You feel that swing trading is so much better than day trading, Jen? Yeah. Everyone has their own cup of tea. Everyone's got their own cup of tea, right? Just got to know what you're looking for. You got to be disciplined as a swing trader. You got to be disciplined as an intraday trader or a scalper. Tony, how about them Blue Jays? Yep. I agree, man. Big game last night. The bats were out last night. Okay, so you see we got this indecision candle going into the close right now. It's a bearish indecision. Here's the close. New candle open, bullish ignited. This is representing a new 30-minute candle as well. Good push. Let's see if we can continue this momentum. We don't want to just push and then they reject this. Nice bullish engulfing candle, ignited. Let's see if we can continue to move with this. Fill these wicks. I don't want to lose this balance right now. I want to keep this thing going. I want to refuel it right now. It's representing a new 30-minute candle. Let's see if we can continue to get up there. I'd like to revisit that white line. It's good. Inverted hammer candle, ignited. Can it continue to push? Good push. Let's see if we can fill that wick. I'd love to get up and break that white line. That's when I'm going to go to a full break even. That would be about 30, 35 pips up there. And then we can start to manage. We're managing risk and maybe take some profit out as well, okay? So let's see if we can continue to break that wick. This is a new 30-minute bullish ignited candle. So we want to continue to hold this momentum. See how they rejected it back again? See how tough this red line is? Man, lots of resistance up there. It's continuing to fill itself up, but that's the big resistance there. So if we lose this opening balance, unfortunately, it's going to turn into a bear shooting star and come back down. And this could be that 30-minute momentum that comes all the way back down, trades into this green box. Okay? So it's still bullish, still holding here. Come on. Just tap into that white line. Make life easier for all of us. Still see, guys, why it's important to follow a bullish ignited candle. You still see how it's holding its opening balance. Sellers have tried to come down there and the buyers keep refueling it. So we're pushing back up. Let's see if we can fill take out these wicks and just drive for that higher high, still holding. Some of you guys, if you want to go to a break even now, you're welcome to, okay? Just to protect your stop loss below here. And then it would be maybe a break even trade. 2.5 minutes to go. This is the first half of this candle. So you see the first half has opened, bullish ignited, held, but we couldn't break that higher high. It's a lower high and they're pushing it back down, okay? So who's going to win the second half of this candle? Are the buyers going to continue to step back in and continue to ask up here, or sellers going to bring it down right there? We lost our opening balance right there. So the candle may have a wick. No, it kind of held. So shooting star. We lost our opening balance now. So now it's a bear shooting star candle. You can see how this happens now. We're currently in this flag. Like if I was to consolidate the red line down to these bodies right there, this is the flag we're in. There's buyers and sellers accumulating in this zone right now, okay? So the volume is still inside here. So again, we're in a bull flag. Remember what I always say, bull flag has a high probability of continuing to break to the upside, but we're trading at the all-time high supply, and there's a lot of sellers up here. So we got to continue to pick up down here, continue to consolidate and accumulate, and maybe close above. That's why I was saying, if we can get blue volume closing above this red line, how important that is, because we could build support off of this and continue to drive higher. But right now, sellers are pushing it down, okay? So see, buyers are bringing it right back up with the last 50 seconds to go. So like I said, I would love to see blue volume closing above this red line. We can build off of that support and continue to break further. We're in this bull flag right now, but both sides, sellers are selling, buyers are buying. Sellers are selling, buyers are buying. Lots of indecision at this all-time high area. We want to trade with the trend. We're trading with the trend. Let's see if we can break out bullish for a new all-time high. But the close above here is so important if we can get it. Okay, here's the close. Again, still below it, okay? So we're bearish. So it's going to possibly come down unless we can get a quick wick again and try to fill. Unfortunately, guys, we got caught in a flag, okay? You know, it would be lovely if we were just breaking out higher highs, higher lows, but sometimes you get caught in a flag in trading. Okay, but let's see if this bull flag can continue to hold up. Buyers continue to ask to trade above here. But again, I can't stress the importance of closing volume above here. Okay, sellers still pushing it back down. Got to pick up again. A higher low wick. My stop loss is just right here in this green box, guys. I'll verbally let you guys know as soon as I get stopped out. I've reduced my risk, but it will still be a loss if it gets tapped in here. I'm still in it. My stop loss is just below the green box. So we just tapped back into that green box, higher low. See if we can continue to push up against this big bearish candle. Good push up so far. Okay, so you see we tapped into the top of the green box. That candle we traded right into it. That's a higher low at the top. Okay, this would be unbelievable. If we can flip this candle back up bullish, turn it into a bullish pin bar hammer, we could potentially have an impulse breakout of there. If we close with volume inside the flag, we can continue to build in that flag. So it's a good response by the buyers. They're here, but but there's so much selling pressure above here as well. They're protecting this all-time high right now, but if we can break through here, it will be a really nice squeeze. Maybe we'll get it to 4,250. Good response down there by the buyers, okay? They're there. But it's how candles close, right? And sellers are strong, bringing it all the way right back down, okay? This is in situations like this where gold is tough to trade. It's difficult, right? We're not trending anywhere. We're not moving anywhere. It's just moving sideways. Both sides are accumulating. We have a close in another minute. So the FOMC speakers, you see, are speaking. Fed's Waller is speaking right now. You can't have a strong growing economy and zero job growth. The way to avoid a mistake is to move cautiously. We can cut 25 basis points, see what happens, and get a better idea. So we've got FOMC speakers right now speaking about monetary policy in the United States. Okay, that was a good push again, but then those sellers are strong, bringing it right back down. So big battle here between the buyers and sellers. We're still in this bull flag, but sellers have position. They could close it below all of this volume. Next bar could continue to fill that wick and drop down into here. My stop loss is just below this green zone, guys. It was down here. I've reduced it to right there. It's not at a break even. If it was, I would have been tapped out at break even right now. So it's open bearish ignited now. So let's see if we can, turn blue, and then we're going to trade into the cut of that 50% of that bearish candle. And then when it comes in there, it may potentially get rejected off of that bearish candle. If we can engulf and come right through there, we might do something like this candle, where we come right back up, something like this candle too, where this bullish one traded right at 50% and continue to engulf it. So let's see if we can get a bar getting above 50% of that bearish bar. And maybe we can engulf, maybe continue to close above that red line, okay? Now we're trading right into 50%. That's where you would see sellers now starting to push this candle down. So let's see if we can continue to make our way up and flag right through here. Good bullish candle. Let's see if we can break through this flag and close with blue volume above. Again, guys, I can't stress how important that would be on this trade. It's a good bullish candle, good response by the buyers. 2 times out of our bullish point of control. See how it held? I just have my stop loss right below that green zone. Good candle. Okay, so we got 3 more minutes to go. Okay, so again, we're fighting with this resistance right here. So can we get blue volume to close above here? Again, guys, if it gets to that white line, it's going to go up 30 pips. That's again when you can maybe go to a break even if you haven't already. But more importantly, let's see if volume can close above here. Because if it does, we've accumulated all this. It could turn to support and give us that support so we can continue to move and break through here. Maybe get up to 4,250, that nice psychological all-time high up there. This is where the big fight is, right here. 4,245. Let's go, buyers. Come on, break through. Let's fill these wicks. Let's get it up here. It's a fantastic candle, okay? Beautiful response by the buyers coming in at 740, but we got to close with conviction. We got to close with authority. We got to close strong. We can't let these sellers push it down again. Because there's a lot of sellers. If we continue asking up here, all the sellers' stop losses are here, here, and here. We can just squeeze and cut right through here. And then we can make some money and we can go to a break even, right? Some of you guys maybe already. That's 25 pips again up there. Am I being greedy, just being stubborn to get it up to that white line? But also closing balance above here. Let's go. Come on, just fill these wicks and drive. There we go. Come on. One more big order up there. Just asked to trade right up there. Fantastic. Good candle. That's about 25, approaching 30 pips. Captain Boom, you took your 1% daily goal, runner to break even. Beautiful, man. Just like clockwork. Clock in, clock out. Every day. But you see how that bullish point of control from this bar, how it's holding, guys. That's why it's important to identify 50%, a little bit above, a little bit below of a candle. Same with this. If this is a nice, big, strong bullish candle, we'll identify the point of control. I'm saying it's going to be right around this red line right there. Here's the close in 30 seconds. So yes, we got that good push. Good. Great push into the 30 seconds, okay? Beautiful. That's 40 pips right now. I'm going to a break even now on that push. Break even, BE time, no risk, nothing, okay? Now, let's see, follow this volume. Worst case scenario is I get a break even, but I want to get profit out of this, but I want to see where this thing will close, okay? So I hope it closes, there's the close, okay? So we're above there. There's the 50% point of control. If you grab your fib tool, watch, look, that bullish candle right there. See the red line? It's basically 50% right there. Where's your bullish point of control of that bar? There it is, 618382 right there. So if we have to come back and pull back in here, we've got a little bullish point of control in profit we can work with. We got a nice bullish ignited candle. Let's see if we can continue to drive through here and maybe grab ourselves 40 plus pips, okay? So it's bullish, it's still holding. Can't break that high, so it's coming back down to the opening balance. Let's see if it holds, refuels itself. Refuel, let's take that out, and let's drive, okay? Still holding. If it needs to pull back in, you see that zone? See how it was resistance all right there? Now turned into a point of control, okay? So we got rejected, shooting star candle coming down. Let's see now, top of the green zone or in the mid. Can we get our buyers now stepping back in, buying a discount pull back right here? So they did, they came in, but we haven't taken it back up to the opening balance. So sellers are still strong. I'm at a break even, guys. BE. No risk in the trade right now. You guys are welcome to take out some profit if you guys like. Remember, it moved up 35, 40 pips. So there's that higher low so far. We might have to retest this red line. This is our daily candle. We're still trading near the highest point, all-time high, mind you, not just the highest point of a daily candle. We're at the all-time high. This would be a fantastic short squeeze right up to 4,250. Every single seller is trying to sell here. Let's see if we can just continue to get it up to the opening balance, turn it into a bullish spin top, and travel back up to a pin bar, go into a hammer, and drive. Okay, see how it's now 50-50. Now we got back we've reclaimed our opening balance. Oh man. Come on, let's drive through here. Beautiful commentary, you like that? It's better than watching a football game. Do you see why? You got it. Hooked up 30 pips, leaving a runner now. Congrats. Let's see if we can break above this white line. Very important white line. It's 50% of this zone. Man, if we can get some blue volume and we make this support, we could drive to that nice psychological 250. But again, it's pulling back, but we're still holding so far, okay? We haven't broke down. Still holding that point of control. 2 more minutes to go. So you see right there, that bull flag held up. We continue to break out. But right now, we got to see if we got to get a little bit more, right? So sellers are pushing it down. My break even is right there, guys, okay? Just so you guys know. No stop loss, just break even. Sellers now are trading right into that bullish point of control. Let's see if we can get a wick there. If we can't get a wick here, unfortunately, this might be a bearish engulfing candle coming all the way back down, okay? So let's see if we can gain a wick in this green zone. It's retesting the red line as well. That was resistance, resistance, resistance. Will this red line turn into support right over here? And then if it comes down and hits me at a break even, then I gotta scratch my head and say, Ron, why didn't you take out any pips at 40 pips, right? That's Ron getting greedy here. I'll let you guys know as soon as they tap me out at break even. But I'm okay with a break even. As long as I have no capital at risk, I'm okay. As long as you guys learned a little bit with this trade, I'm okay with that as well. If you guys took out some profit, that would make me very happy. Okay, so this is a big bearish bar coming back down there. So I got tapped there, break even, okay? So that trade is done, nullified, break even, no win, no loss. I don't like the way, personally, how the volume is trading. We're not like really trending right now. It's ugly. It's bullish, bearish, bullish. That was a big bullish candle and bearish. So I kind of want to stay out of this right now, escape with a break even, and just continue to analyze again, okay? The markets now are too choppy. We're going into 8 a.m. and COMEX very, very soon. Okay, guys? So it's live, you know, a break even. Originally, when I took the buy, my stop loss was below these bars. When it broke out, I took my stop loss right below this green zone, reduced my risk, and then I went to a break even on that. Okay? So now I'm out of it. Okay? And then if you're continuing to trade, I would cut that bearish candle in half right there. Again, it's right there. It's right at the resistance, okay? You can see that 4,245 area. I hate when gold trades like this. It's very, very, very difficult to trade this shit. So I'm happy to get out of this with a break even. I'm not happy with myself where I didn't take out any profit, you know, up 40 pips. My bad. I should have taken out 80% up there. I didn't, okay, guys? I was getting a little greedy, looking for that when it opened bullish to get that continuation up to 42.50. There's those kind of equal highs. And now we're pushing down, okay? Wasn't easy, guys. That was a difficult trade, right? You know, see how many times it came down, came down, came down. But I want you guys to learn that when it came down in here, that body held, pushed us back up. Again, that was a bearish candle that came all the way down while we were in the trade. Look, it respected it. And then a nice bullish candle broke through here. But my only mistake on that, I critique myself. I'm very honest with myself. I'm happy that I went to a break even. I protected my capital, but I'm upset with myself that I didn't take out profit up 40 pips. That white line was my target, and you see, I failed to be disciplined and trade to that target. So you see how I left some money on the table. I didn't have to close the entire trade out, but I should have closed at least, you know, my 80-20 rule. So that's where, when I review this trade, I put in my journal, that's the one critique I have on this trade, that I failed. And that's where the big sellers are now, pushing this thing all the way back down, okay? We'll wait till 8 a.m. now for gold to settle down, and we'll revisit it. Do you guys mind if I do like US30, a top down on US30, and we'll revisit gold just after 8 a.m. and we'll watch how it's trading right now, let it settle down, and then we'll come back into watch how it moves into COMEX at 820. I kind of don't want to trade this volatility right now. Just got out of that trade. Just want to kind of refocus and come back after this thing settles down. We have our zones. We'll see. If it comes all the way down here, we'll see what it does here. If it holds up here, we'll see maybe continue trade up here. Maybe we'll break out for COMEX. Maybe we'll come back down, sell it for COMEX. But I kind of want to get one of our indices out of the way. And then we'll watch gold from like, let's say, 10 after 8 till about 8:45. And then we'll do our other index. And then we'll get ready for Wall Street, okay? So I'll start off with US30, guys. We're going to do a top-down analysis because we also trade indices. We don't just trade gold all day here. We do other things, okay? So what I want to do with US30 is, again, start off on the daily, right? We can go like gold. Remember, we went to the monthly, okay? So we can just do a review of the monthly. Here's where it was trading November 2024, bullish. It was barcoding. December, we had a sell. Came back up January of the new year. Then we really pushed down. Look at March was when we closed bearish below there. Then this was April when Trump announced tariffs in the market, Liberation Day. That's when the market sold all the way down, but picked up a big wick and returned back up. Then Trump took the tariffs off. That's why they call them taco. Trump always chickens out. And then you see how the market kind of bought that dip and then came back engulfing, just like a 5-minute candle, bullish engulfing, small pullback, and could have bought right there, like the month of June. For any swing traders, you had an inside bar in July, continuing August. Look at where we're trading right now. All-time highs, continuing to push up. There's a lot of bearish divergence on the monthly, but it continues to drive. So it's not ready to come back down yet, okay? So it's still pushing up. If we go into the weekly was pushing up. Last week, we had a bearish engulfing candle where engulfed came all the way down. And look at this week. They gapped it down, and it's a bullish engulfing candle coming back up with a gap down open. So will we engulf, and next week, are we going to continue to trade new all-time highs? It's unbelievable, the strength of the stock markets right now as well, okay? So let's start off on the daily. Let's do our analysis. So remember what I was talking about in December was that sell in 2024 right there. So if you kind of boxed in that volume right there, that box, you made it red and you figured that out. There was multiple days you could have figured that out, but you stretch it into the future. You could have been preparing yourself coming back up in February of this year for that double top drop, okay? Same zone, stretch it into the future. You can see right there, early July, came in there, back down. We came in here again, end of July, back down. Came in here again, or mid-August. Finally, right there, that big bullish candle on August 22, that was Powell speaking at the Jackson Hole Symposium. That was day 2 of that event. And he was hinting that the market would start to cut interest rates. So the market rallied. Bullish blue candle closing above that red zone. Same thing we do on the 5 minutes. Do the same thing on the daily. Make it green. Stretch it into the future. If you're a swing trader and you're patiently waiting for it to come back down, just like on gold, you remember that 5-minute candle? When it closed above here, see when it took 5 minutes, 10 minutes, 15 minutes to pull back in here? It took 15 minutes. It took over a half an hour to pull back down in there, and it went back up. Same with where we were trading. We bought that, see where it came back in and went back up. So same like what we look at on the 5-minute candles, same thing you can do on the daily. There was that 5-minute break. Look at where the volume closed, right at 50% red line, and we're opening bullish back up again. Okay, so you can do the same thing with your daily bars. As soon as it closes above, stretch it into the future. If you waited patiently, you got to wait over a week, but it came right back into there. And if you bought, stop loss below, you realize zero drawdown and you're right into profit the next week. That's for swing traders. If you don't want the hustle and bustle of trading 5-minute candles, 1-minute candles, stop stressing yourself out with intraday trading or scalping. Someone in the chat said, I find swing trading easier, and I agree with you. It is easy, but you got to be patient and disciplined as a swing trader as well. You can't rush trades. If you got to wait 1 week, you got to wait 1 week, right? Just like us on 5-minute trading. If we got to wait 30 minutes, we got to wait 30 minutes. Sometimes we wait an hour to hit a trade. You might have to wait multiple days as well. You can't rush swing trading as well. You got to be patient, disciplined with everything. Trading is the same for all time frames, okay? But you see the common theme? Patience and discipline. Proper risk management. When you go into profit, even as a swing trader, if you go up 200 pips, bring your stop loss to a break even. Scale some profit out. Same thing we do as scalpers, you should be doing as a swing trader as well. We just do it faster, and we don't look for 300 pip moves. We look for 30, 40, 50 pip moves. Now, look at when it came up here, resistance, push back down, came back up there, resistance, push back down, came back up there, resistance, push back down, came back up there again, resistance. Then we got a bar that closes above, pull back into that, and move up. So we have a zone right here. I just talked about it. Now let me show you it. There's a red zone. It's easy to see it now. I hope you guys say, Ron, this is easy. I can see it. Good. That's what I want you guys to look for. Someone will say, well, Ron, you're just looking in the past and you're just backtesting. This is easy shit. Good. That's exactly what we want you to do. We want you to spot this because price action shows us what it did in the past, shows us how it's trading in the present, and we can predict where it's going to go in the future by extending these zones into the future, okay? So I know some of you guys want to be like smart asses and say, well, Ron, it's easy. I can do this all day. Good. If you can do it, why are you not doing it? As soon as that bar closes above, are you doing this? Are you flipping it green? I know it's easy to do this. My daughter is 9 years old and she can do this, so you should be doing it as well. Continue into the future, right? And then you see the dip, they gapped it down, they gobbled all of that volume, they brought it back up, they closed. We opened bearish, 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 came in there, higher low, and look at, we're continuing to drive up. Okay, so these zones are still holding. I have another zone that you can look at right over here. Like there, wicks to the bodies. I can extend it all the way up there, but that's kind of exaggerating. Maybe I want to bring it back down to those 2 wicks, because if I bring it into the future, I can see I'm trading more wicks right into there again, right into there again. Did it close above? Yes. Can I make this zone green? Absolutely. Stretch it into the future. Same size zone, right into the future. Look at, we're trading right into it today. I see we impulsively broke above it on Tuesday, closed below it again. Impulsively broke above it yesterday, closed back below it. Right now, we are bullish ignited on the daily today, okay? So a couple points of interest if we get up, if we continue to drive. There's big bodies right there, body, body. That was the all-time high of US30. There's our bodies. If you want to mark the all-time high, go right ahead and put an orange line up there. That's our all-time high. We got up there on Friday, October 3rd. 47,065. Since then, lower high, lower high, lower high. No volume closing above these previous body candles. Lower high, big push down. That was last Friday. They gapped it down over the weekend, gobbled it up, bullish engulfing candle. It's been retested, came back up, pushed up, but you see we didn't fill that wick, got rejected, volume closed below. Yesterday, let's follow yesterday's volume, okay? It opened, it was initially bearish. We opened bearish, 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 came down, higher low, back to the opening balance, then it flipped bullish. It was bullish, 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 bullish. We took out the previous day's high, took out this high last Friday, created a new high of this current trend, but we're still lower highs from the all-time high. Then they rejected it back down. Sellers were in control yesterday, and they closed it back below this zone, okay? Right there. Now let's look at where we closed, where we opened today. Opening balances, closing balances, point of interest. We closed right there, open right there, yellow line. Do we have a wick on the candle? It's very tiny. Today's candle basically looks like a bullish ignited candle, just like when we look at it on the 5 minutes, okay? So it's still holding. But look at the wicks that we got to fill. These are not short wicks. These are not like those firecracker wicks. This Tuesday had a big rejection wick. Yesterday had a big rejection wick. So we have a nice bullish candle. It is strong. It's bullish, 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 where we got up to today's highest point. But you see it's got a lot of backfilling to do. And then it's got a big uphill battle to do. When it does that, sellers are just lowering their offers right there. 46,530 is our daily high, and then they're pushing it right back down. We still have this bullish volume to work with. Will it continue to refuel itself pre-New York, pre-Wall Street? Will Wall Street fill this and break it out potentially? Or are the sellers going to push it all the way back down to the opening balance? Then we flip bearish, and then we rotate the candle bearish, shooting star, pushing down. Then if we rotate down and it's bearish today, bearish, 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 right there. You got a point of interest, body and a body. Right there, place a yellow line right there. Okay, for scalpers, maybe you're not looking for that big of a move. Measure it so you know from yellow to yellow tape, that's a 210 pip move. That's fantastic. But me as a scalper, maybe I just want to cut that zone in half. Okay, I could literally just cut it in half, place another yellow line by cutting it in half, right? If I don't want to cut it in half like that and guess, get your Fibonacci tool, from that yellow line to that yellow line. This is called reading the tape. This is an old school method that dinosaurs used to do back in the day. Believe it or not, I'm a dinosaur. Okay, right there. See how I cut it in half? Now, if we flip today's daily candle, we move down bearish. Me as a scalper, I'm just looking to get my pips right there, hit my daily goal, and get out of the markets. I don't care what happens after that. I've hit my daily goal. Measuring it so I know exactly. That is exactly 100 pips, 105 to be exact. That's actually over my daily goal. I normally look for 50 pips, 60 pips as a daily goal. That would be a bonus for me. If I continue to get that extension, perfect. That's what runners are for. But now we have points of interest of support below us, right? We've got a big zone down in there. Another point of interest, see right there, body to body. If it continues to break, you got to have your points of interest at each one of these locations. And this is what we got going on so far. So we've got volume below this trading inside here. I don't see any blue volume closing above here. So this zone above us, this green one, is in fact a red zone today. Okay, I know buyers don't want to see that, but here's history telling me it came up, got rejected, volume below, red zone. There was an impulse breakout yesterday, volume closed below, red zone. Today we opened ignited, bullish coming through there, impulse again, and now the volume is still trading in that red zone where sellers could rotate this thing down. Unless we can, if we can close with a daily candle above this red box, I have no problem making it green for tomorrow, okay? But right now we have to respect this zone right now, okay? So let's now break this daily candle down into 4 hour. Let's see how volume was moving from like London in the Tokyo session. Look at the big double bottom on the 4 hours, okay? Look, it came down, one bottom. There's the neckline. There, right there's the second bottom with liquidity. Second bottom, broke out right through there, closed above. Look at the retest. Retest is right inside that zone. If you looked at, okay guys, this is why I'm telling you, you've got to understand a point of control of a big body candle. That's a big body 4 hour candle. Okay, if you say it's not, I'm going to say, what are you smoking? It engulfed 1, 2, 3 bars, 3 bearish. These are 4 hour bars. These are not 5 minutes, but that big bar engulfed it. If you just did this and you're patient and you're disciplined, opening balance, closing balance, just as if that was a 5-minute candle, what I just did with gold with you guys, and you found the 4 hour point of control. Remember, it's the 618 and the 382 right there. Look at, you could have been sitting there with a pending order waiting. You had to wait an additional 4, 8, 12, 16, 20, 24 hours, one entire day. But look, it came right in there, hit those pending orders, could have filled you up in a buy with 0 drawdown, and you're in profit right now, right? How do you identify that zone? You draw the block, right? You can even pinpoint 50% right there. You guys understand that? How to do that? You got to do it with these big body candles. You know, the second leg of a W pattern is the bullish leg. That was the retest so far. So are we holding that? We currently are, okay? So you can extend that in the future if you like. That's for 4 hour traders. Someone said, you want to be a swing trader? Well, you got to be doing exactly what we do as scalpers too, but do it on higher time frames. Now, we pulled back. We continued to move up, move up, move up, push up. They rejected it right back down. Wednesday, 10 a.m. Okay, look, a big drop right there into 50%. That point of control. Buyers brought it right back up. It closed bearish. We continued to push down, higher low, close right there. opened right here. This is the opening day of the candle, 6 p.m. on the 4-hour. Okay, we opened bullish ignited. Filled up right up to there, red zone, push back down. Look at this tiny candle. This is 10 p.m. to 2 a.m. No volume, but still held. And then we started Europe. Look at Europe. A bullish ignited candle. No drawdown and just bullish, bullish, bullish. It closed right near the high. And then we opened right here, our new 4-hour candle, 6 a.m. to 10 a.m. We have still less than 2 hours to go. It was initially bullish where we drove up to the highest point of the day. And you see it's trading into about 50% of that bearish body. Same thing. If you look at that, that's a big bearish engulfing candle coming all the way down. There is 0.5. There's my zone. 382, you see, is the highest point of the day. I could bring it down to that 618. And you see it's getting rejected. So it's still pushing down. It's pushing all the way down. Now, will this bearish 4-hour candle completely engulf all of Europe? Then maybe Wall Street, we're going to sell off. We're going to fill this wick. We might fill that big wick and continue selling. Is today going to be a selling day? So if there's buyers, they better start stepping in either right here at 50% of this bullish candle, maybe at the opening balance right here, and 100% at this yellow line. Okay, so those are the points of interest. What I would do is just cut this European volume in half. How to do that? If you can't do it by eyeballing it, opening balance, closing balance, there's the 0.5. 46,402. That psychological number right there. I'm going to draw a white line. Remember, white line on my charts represent either a 4H or 1H. Okay, I'm not going to do a point of control. I'm just going to do a white line. Okay, and right there, that's going to be the battle. That's right there. Now sellers are in control. If they continue to push it all the way down, I want to mark my opening balance of Europe. Right there, 46,330. And then this is where I would like to see buyers hold Dow Jones. If this breaks, buyers have lost it. They've lost the point of control. Then sellers can fill this wick and fill this wick, close it below there, and then Dow is dropping. Okay, so right there, you see how it's coming into this? If we look from the all-time high, that wick is a lower high, that wick is a lower high, that wick from Europe is a lower high, that wick from right now is a lower high. So it is pushing down, right? It's descending down. This is going to be the big battle today, right inside here. Okay, so going off the 4-hour candles, go to the 1-hour. Now we can see what the 1-hour is doing. There was that big drop yesterday at 1 p.m. Yesterday drop, came back up, started to consolidate here. There was the drop down, holding in this green zone. That's why I made it green. See how it's holding? We came pushed all the way back up. Right there, 6 a.m., 7 a.m., starting to push right back down. So if we lose all of this zone, then you can start to see where it's going to be bearish. This looks like a left shoulder. There's your inverted head, the all-time high up there, and then there's your right shoulder pushing down. This pattern, if it closes below here, closes below, not just an impulse, not just like a wick coming down, going back up. If you see a black bar close below here, you're going to flip that green zone red. We might trade into this, get rejected. Now we're filling wicks. We're filling that, maybe filling that to the downside. And then you're going to see US30 is momentarily bearish and starting to sell down. Okay, right now it currently is selling down since 7 a.m., 8 a.m. But let's see what happens down into here, leading more into Wall Street. Okay, if we look on our 5 minutes, this is what we got going on the 5 minutes. There's a big push down. It came back up, consolidated in here, came right back up. So we hit the highest point of the day. Now we can pinpoint exactly what time it was. 6:55 and 7 a.m. transition, new hourly candle, start pushing the market down. Came back up, lower high, pushing all the way back down. Let's see, if you want to buy, it would be best advised to be locating a buy inside this zone. If you want to draw a little line right at 50% in there, around 46,310, 300 area would be a good opportunity to look for buys. You're buying with all of this volume that continue to push the market up. It may come in there and bounce, and if it bounces, remember you're trading against resistance. Right there, it could come up and go back down, right? It could go to the top and go back down. If it comes back down, then maybe we're looking for a second bottom, maybe a higher low. Then that second leg has more volume to break out, maybe reach that highest point. If we lose this, then could be bearish, okay? That's for US30 right now. Right now it's pushing down. There's the daily bar. Remember, open very bullish right there. That opening balance was very bullish today, and now they're starting to push it down. This right now, starting from 7 a.m. is representing the wick getting rejected, and that's all we have left of opening day balance volume right there. That's what I'm saying. If the buyers don't step in here, look how short the wick is. That could turn into a bear shooting star. And look at just clearing this green zone below here. I would say we're going to trade maybe down into there, somewhere right in here. 46,230. That would be a 65 pip drop right in there. Someone could hit their daily goal. When we get to that yellow line, we'll see if our buyers are there. If they're not there, then it'll be somewhere like right around here, right? So that's how I would be looking at my charts. I am trading US30 today. This is how I look at this, right? Let's add an indicator. Okay, it's below all volume now. Short-term volume is below this 9 EMA, so it is currently bearish. And there's our 200 EMA, and we got volume below that. This is what you call your death cross, where the 9 EMA is maybe crossing below the 200, and it will continue to drop down. However, if it pulls back up, now you might be trading in some resistance, and it will be maybe a counter buy, and then they continue dropping it down, just like this. This was a counter buy, and then they pushed it right back down. Might be a counter buy, and then they push it right back down. Okay, that's why you got to look for volume to close above this white line, so it can be turn resistance into support to get up to this line. Then when it gets up here, you got to look for volume to close above there, so you can invert this zone and make it green to continue to fill back up. Okay, so that's US30 right now. We'll leave US30 on the left right over here. We'll do NASDAQ in a little bit. We got to go to gold right now. Okay, so gold came down, broke below there. It's coming right back up. We are 6 minutes away from COMEX. So, and news-wise, what do we have on deck for news? U.S. governments are still shut down. We're going to get our release of our U.S. Philly Fed Manufacturing Index coming out at 8:30. It's a medium impact news. I don't see tentative, so they're probably going to release this folder. These are those FOMC speakers that are speaking throughout the day. And we'll keep an eye on that, okay? We don't have really any high impact news coming up, but we do have COMEX, okay? Are we all good, guys? Ashton, you're not going to get yelled at. If you're still confused, it takes time. Watch a couple of our live videos. You're not going to just learn this right away. It takes time. But I don't know, like, let me eliminate your confusion. All I did was a top-down analysis. I went from the daily, marked my points of interest and my zones on the daily. Then I moved down to the 4-hour, so I can see how the market opened up 6 p.m. traded in the Tokyo market, how it traded on the 4-hour bar in London coming into pre-New York, and then look at the 4-hour bar from 6 to 10 a.m. going into Wall Street. Start to see a 4-hour trend. And then I went down to the hourly, see if there's any specific hourly areas. I'm a scalper, so I want to figure out those areas. And then I bring it down to the 5 minutes. And then I have all of my lines on my chart. I place emphasis on the higher time frame lines. I put more weight on them. Obviously, if it's a yellow line is from a daily. It holds more weight than this white line. The white line I got from an hourly, right? So I know it might be confusing at first, but it's kind of like a grid system. And I trade off of it, right? That was where, you see, I went against, and I should have taken out my profit on that gold trade right at that white line. Okay, why did I place that white line there? Because it was exactly 50% of that red zone. And you see, I failed to follow my own rules, and then the trade came back down and hit my break even, okay? What is the red line? It's a 5-minute cut line. The red line is from a short time frame, these 5-minute bars, right? So I'm just cutting candle, like right there. If I bring that right there, you see the 5-minute support holding right there? That's the red line, 4,240, right? These are the red lines. They're called cut lines. If I need to cut a bar in half, I move it up and I cut that bullish bar. That was an open close. There's 50%. It's my cut line, guys. You know when you eat a steak, how do you eat your steak? Do you just grab the steak and just put it in your mouth and eat the whole thing? Unless you're like a barbaric, you're a carnivore, yeah, you can do that. But normal people use a fork and knife and cut it. You got to cut a piece of it and put it in your mouth and eat it. So same thing with these candles. I cut a piece of it. I cut it in half, Stupid analogy, but I've seen people eat steak with no fork and knife. Me too. When I'm really hungry, just grab it right off the barbecue and shove it right in my mouth. It's kind of barbaric, caveman style, but it is what it is. When you're hungry, you got to eat. Okay, guys, so I hope everyone knows what COMEX is, because we're always going to get someone that says, Ron, what is COMEX? Okay, I hope you guys understand what is COMEX by now. You need to cut it. You're right. When the price gets too high, we need to cut it. Okay, so we have 2 more minutes to go, and COMEX is opening up. Okay, so you see this green zone now? I'm just going to now manipulate it myself, watching what's going on. Just bring it down to there. Okay, so that's our support now. So what pattern do we see on gold on the 5 minutes? I see it come up. We were in that buy. Unfortunately, I didn't take 40 pips of profit out. I'm upset with myself. And then it came back down, hit my break even, but that's how deep it went. There's our support. There's our next leg coming back up. So are we coming all the way back up to that white line to produce a double top, maybe a new all-time high breakout? Or right now what I see is a lower high, and are they pushing it back down to reattempt right there to break this? There's your M pattern with your lower high shoulder, right? Could break this, drop, maybe come back up to retest this. We make it red, then we're trading into this green box. If it breaks, then I want to pay attention to that white line. It's white for a reason. Okay. If you're in a trade prior to COMEX market opening up, just get ready for some volatility in 1 more minute. Okay. You could be in a buy, you could be in a sell. Sometimes the COMEX market opens and there's a substantial amount of volume that enters the market, and you're going to see some big body candles. Okay. So just hopefully you're not over leveraged. You're managing your risk. Good luck to everybody, and let's see what COMEX brings us. Ib, what's going on? You're holding a sell from 45? Nice. Ib, if you're up 50 pips right now, go to break even, bro. Okay, so we got 20 seconds. Are they going to break this support right now? Yeah, all entries on gold are on the 5 minutes. We're trading 5-minute candles. Okay, remember, they can do some funny things at market open. It can open bullish and come right back up. Let's see. Bullish ignited. Okay, so it's bullish ignited coming back up. 50%, you see, 50% is the bottom of that red zone right there. I don't even need to draw a cut line right there. Okay, it's right there, that red line. 4,243 and 34 cents. Still remember, its opening balance is strong right now. Okay, they flipped it down. Okay, we didn't get crazy volume in the first 30 seconds of COMEX, but still bearish. Now, if the sellers are here, they should definitely be able to break this green box, but buyers are still here holding it, okay? I'm just going to look at my spreads right now. Damn, spreads are 1.1 right now for me. Normally, I like to trade where it's 0.4, 0.5, but spreads have significantly increased in the last couple of days also with my broker. Okay, so you see, still bearish, lower high, pushing down. Some of you guys use this 9 EMA, it's respecting that, resistance. Let's see if the sellers, this is when they got to break this zone. With COMEX, you know, this is not, it's not difficult to break this. So they should be technically able to break this. If they can't break this, then it's showing the strength of this support zone, especially with COMEX market open. Okay, so there's that lower high shoulder right there. You see, guys, why I made a big critical mistake? I didn't take out my profit up there, right at that 50% white line. And then now you see how they're building resistance off of it. There's that lower high shoulder, and the market is still pushing down now, okay? So this could be an impulse break, and it could impulsively drop. If that's a gamble you want to take, you can take it, okay? Or what you can do is learn patience and discipline. Wait for the body to close. You gotta hold off for 2.5 minutes, okay? And then if it closes bearish below here, we're gonna flip that green zone momentarily red, okay? So this is the impulse break. They've taken out that wick, that low. This is COMEX volume. So this increase of volume potentially could break this zone. When it came in there, look, it's still respected by the buyers, buying it right back up. That's why sometimes it's not a great idea to trade on impulse, okay? If you ask me, it's best to trade on confirmation, but it requires patience. And then it requires, what if it drops down and then you miss out on those impulse pips, okay? But try it, see it. If it works for you, then trade like that. But majority of the time, a lot of impulse breaks are there to fake you out. They just come down, you sell, and then it catches a wick and closes back above here, and then it's moving up in bullish, and then you're caught in drawdown. Okay, so the best scenario is wait for a body to close, but this is an open market. This is now COMEX. This is not just your normal 5-minute candle. So that's why I said this should be able to break this zone with no issues with COMEX volume, and that's what it technically is doing. But now we have 60 seconds. So I want to see, will it close below this? And then if I flip it red, then maybe it's going to come back up and then get retested here. And then this will be a zone of sellers. Ebe, nice sell. You're up 70 pips right now. And then you see it down in here. That was a bearish candle that came in, went back up. That was a bearish candle that went back up. That was a bearish candle that broke, that went back up. That was a bearish candle right in there, that went back up. So is this another bearish candle coming all the way down into here, 4,235? Because you got to respect that there was buyers there. There might be the buyers waiting again right in here. But see that impulse? Look at how it got pushed back up. It's closing in 10 seconds. Let's see where it's going to close. 65 closed out. Nice one, Ebe. Good shit. Okay. Here's the close. Again, is it closing below or above or inside? Below. Okay. So green to red momentarily. It opened ignited, continuing ignited. So it could continue to fill that wick and drop a little further. However, if it comes back up, it might retest this location. Okay. And then if we want to sell, maybe we wait patiently for it to come back in. Maybe we sell back down like this. Okay, unless you jumped in right away on that first ignited bar and you were quick, you're in the money, that's an ignited bar. That's what we're talking about with those bullish ignited bars. Now this is just the opposite, okay? So this sell-off started at that white line right there. Came down, bounced, lower high, coming back down. COMEX is really redistributing it to the downside. I would pay attention to this green zone if you're in a sell, because it's showing me there was buyers there, buyers there, buyers there, buyers there, and buyers there. So it could come right back in here, catch a wick, and reverse back up. If you're in a sell, I would recommend you go to a break even, and I would also recommend you scale out a little bit, right? Because if you're in a sell, you want to sell your position where the buyers are. Buyers are inside here.
For all the oil traders, there's a message here. If India and China stop buying Russian oil, it will shoot up oil prices and create volatility in the market. This is coming from the India government source, okay? See, guys, how that bearish candle came right into the green zone? I don't want to be that guy that says, I didn't tell you, I didn't warn you guys, you know, telling you that it came in there and it's going back up, okay? So that's what I'm saying. If you want to sell, it's a great idea to take some partials out there. You sell high, and then you buy your position back low, right? Look at the candle now, reversed as a hammer. Where? Right there at that green zone. That's why I trade very technical to these zones. And I don't worry about what could have happened or what should have happened. Teaches you discipline. This is why a lot of traders lack discipline, because they don't know where to trade to. They're guessing. Now we have 2 more minutes. Sellers could definitely continue to push this thing right back down, okay? But it could also reverse back up. My biggest, well, I had a couple flaws when I started trading. Was I was over leveraged, right? Like everybody. I had to learn how to manage my leverage and my risk. Another thing was I was getting into trades and I didn't know where to close out. I didn't know where to place stop losses and things like that. So then when I started to learn how to do zone-to-zone trading, not only did it make me more consistent, but it taught me discipline. And that was one of the biggest things I was lacking as a trader. So this is how I learned discipline. I trade from here to there, right? There you saw, I lacked the discipline where I was in the profit and I failed to take out my 80%. And you see how the market punished me, but thankfully I brought my stop loss to break even and I learned from it. Okay, now let's see how this candle is going to close in 1 more minute. Yep, I'll be doing NQ around 10 to 9, just right before 9 o'clock. We did US30. But we'll do an NQ in just a little bit, okay? Let's just watch this gold here. See, it's a bullish pin bar coming right off that green zone, but we still have the bearish. Sellers are still in control of the opening balance. 30 seconds to go into the close, okay? So it's kind of retested the red zone, got rejected. We're trading right at the opening balance again. So this could definitely continue to push down bearish. Fill that wick and break that green zone. The next bar could also open blue off of this momentum coming right back up and retest this. So let's see where it closes right now. Here's the close. Okay, so open bearish ignited. Will it turn blue right away or is just going to drop it? Okay, there's blue. Let's see if it gets rejected right at that red zone. Okay, there's the rejection so far. Okay, could be an impulse breakout of here. Off of that, it retested that green zone. Okay, so now it's coming down. Let's see if it builds its way back up, and we could maybe look for a buy to just fill up to this zone right up here. Remember that retest right there? It opened bullish right off of there. It created that higher high, then it got rejected, and now it's kind of refueling itself. Let's see if it can continue to refuel itself, or sellers are going to continue to reject this bar down. I'm going to buy, okay? I'm going to go in and buy, and I'm going to see if I can take it back up to this red line, okay? I'm going to place my stop loss below the green zone, below Comex wick, below the green zone. I'm looking for it to come back up to test that resistance, that red line. I'm going to measure it right now so I know exactly if it gets up there. It's, again, approximately 40, 45 pips, right? There's a nice bullish move. Guys, holy shit. That's 30 pips. I'm going to a break even right now. Right now, break even, 30 pips. If it gets to that red line, I got to stay disciplined. I got to do that 80% rule. That's 40, 45 pips up there. So I just took that trade right off of that bounce right there, bullish. They brought it down. As soon as it broke out, boom, filled. Okay, I'm taking out 80% right there, 80% out. that was quick scalp right to that red line. 80 pips, I would love 80 pips, but 80% out at 40 pips and 20% at break even. Guys, that's scalping. You got to be fast. Do you see how I read that? It came down, tapped right in there, closed, opened bullish, came up, it broke right there. But then when it pulled back down, it was refueling itself. I took the buy. Yes, it was an impulse buy, but I'm reading the previous candle, how it bounced off there and that momentum continuing right to that red line. Right exactly to that red line. That's discipline. You want to learn discipline? That's discipline. If you went to the washroom lazy, you got to learn how to wear a diaper. Okay? I wear a diaper. I piss my pants. I'm telling you, there's no time for bathroom breaks when we're scalping. You got to learn how to piss your pants like the rest of us. You know when you're pissing your pants, you're a veteran in the trading game. Okay? Wear a diaper. Depends. But see, now I have just 20% running. I break even. If it goes further, excellent. But that was just my target, right to that red line. If it continues to go up, we're going to go to that white line. We can continue to measure it all the way up there. That would be about 60, 65 pips. Wow. Okay, that's fast. Holy moly. News, if there's news, there's news. You see how I didn't even care if there was news. I just look, I follow price action. If there's news to follow, fantastic. But the body came down there for a specific reason. Whether the news was positive, negative, I'm following price action, okay? So I got 20% remaining with a break even. I hope we can close above this red line. We can build off of this. We can maybe target that white line where I didn't take out my previous profit. And all-time high, guys, is that orange line right up there. You took it, Sherry? Good. Nice one. Negative for the dollar. Let's look at the news. What was the news? Was it Philly Fed manufacturing? Yeah, very negative. Look at what they're forecasting. 8.6 positive. It came out negative almost 13. That's negative for the US dollar, right? That's why gold just pumped out of there, out of the gate. Wow. Okay. We're closing right now, 1 minute. Hit the likes on YouTube. We have almost 450 viewers. Hit the likes. Hit the subscribe button. If you're having fun with us. Last night we killed Tokyo. Tokyo was a 150 pip trade. And we started at 7, we were done at 8:30. So we're carrying our profit into today from last night. Wow, guys, 30 seconds going to close. If we, whoa, we might get to that all-time high. This might be a 100 pip banger. Oh my goodness. Come to Papa. Wow. Guys, 20 seconds. Don't be greedy, please. Take some money out of the market. That's a good candle, guys. That's a great candle. Gold is on steroids lately. I don't know, it's got like human growth or something it's taking. But you see, we failed to close above that white line again. We opened ignited. Let's see if we can continue to break and pop a little further. But if it needs to pull back, we're going to pull back to this orange line or the red line. The red line was resistance right there. There's the volume closing above. If it pulls back, could be support at that red line, higher low, shallow pullback. If we got to pull back, where's 50% of that bar? It's right there, that orange line. If you got to use your Fibonacci tool, opening balance, closing balance, you gotta be very robotic. 618 is right there. Right there, 382. There's the point of control. Guys, we are pushing right up to that all-time high. Holy shit. Guys, that's 80 plus pips. Okay? Don't get too greedy. I'm closing out the rest of my 20% up there. Okay? I just hit another daily goal with this. Okay? I'm closing out the entire trade. That's me personally. You guys can continue to hold. But Ron needs to eat some pancakes. I got bills to pay. Wow. Okay, so I'm out of that. Remember, I tell you guys, my goal is 30, 40, 50 pips. If I'm getting 80, 90, 100, Ron's loving life. Okay, and I'm not a greedy person. I'm very humble. I appreciate. I know how difficult the markets are. So when I don't fool around, guys. I'm a different breed than most traders. Someone will say, Ron, you're crazy. Closing it out there, it could go higher. I don't care. What happened on that trade right there where I didn't close out, and look at what it did. So I learned from that break even not to get greedy here. Okay? So please, guys, learn. Everyone should be at a break even, number one. Okay, that's first thing. You should also learn how to scale out. That's the all-time high right there. Yes, it could go further. How high could it go? $5 increments. If we're scalpers, we go from 250 to 255 if you're going to continue to hold right there. There's the cut line, 50% from 260, right? Man. What was that analysis called? It's called zone to zone, from this zone to that zone, looking at the trading price action, okay? It doesn't matter what the name is called. Who gives a shit about the name? It's scalping. That's what it's called. I know you guys are getting too caught up in what these names are called. I could call it Mickey Mouse. It doesn't matter. It's reading price action. It's letting the market sell off during COMEX. Ib, why do you think I told you to take your money out? Go to break even and take your money out. Ibrahim, I was looking after you, bro. You got to understand. Because, you know, it's still bullish, right? You had a beautiful sell. You were up 65, 70 pips right into that green zone. And you see sellers, I told the sellers, close, take some profit, and then look at what happens. If Ibrahim in our group didn't take out his profit, he either would have hit break even or it would have been after his stop loss, okay? So you guys got to understand this. Don't get greedy. As soon as you get greedy in these markets, they will punish you, okay? I'm telling you guys the honest truth. I've been punished back in the day and I learned my lessons. I say when I close out the trade, it's it's your business. Whatever you want to do. If you want to continue to hold it, maybe you're using a different lot size than me, things like that. But I got to focus on what I'm doing here, guys. I try the best of my ability to, you know, hold trades as long as possible. But look at, so I don't want to be that guy that says, why did I close at the all-time high? And look at now that bearish candle coming all the way back down. Guys, I've been in the markets. Look at, I was bald and now I got hair. So, you know, I've been in these markets for a minute and I understand that this shit can happen. I don't want to be that. Look, you see what I mean? That's right there. Look at, guys, how volatile these markets are. This is disgusting. So, you know how, look at this. You know how euphoric we were just there? Look at what they can do. Is this normal? No, it's not normal, but that's why I can't control volatility. All I can control is my discipline. And you guys see why you got to be disciplined in these markets for shit like this. Now all kinds of news is dropping and markets are wild right now. What is that? That's the market being the market. That's breaking the all-time high, and that's a huge seller up there, Luciano, just dumping the market down, okay? Look at the volatility now. So you guys wonder why I pip and dip? That's exactly why I pip and dip, okay? I've seen this too many times in my day. Now I want to stay out of this market right now. It's too volatile. This shit is insane right now. I'm not getting involved in this. I don't care if it dumps all the way down here or if it's a big bullish candle up here. This is too crazy right now, okay? I tried to warn you guys. If you guys can either listen to me or not listen to me, you know. I try my best to warn everybody. Why do you think I don't even get greedy with my 20%? You know, sometimes we leave 20% to run as long as you want. I'm not like that. 20% is still money. Still, we broke. That's it. I told you guys, I'm closing the entire trade up there. Markets are crazy right now. Maybe they dropped some news. What did they do? Okay, we got the Philly Fed manufacturing report is out. Is that what caused it? Maybe just tapping into all-time highs? Maybe broke it down. Sergio, you're absolutely correct. Ultra pip and dip these days, you got to be faster, you get burns. Spreads are going crazy too. That's why I don't want to I don't even want to look at a trade right now. So I'm on the sidelines. Why would I want to entertain a trade right now after we just made some money, right? So we got to stay disciplined. Gold can move crazy like this. They might trap buyers, trap sellers. I don't want to engage in this shit right now. I'm just going to open up these zones a little bit because now volatility has really opened up. Charles, all your trades, no loss. Congratulations, brother. And last night, you also hit in Tokyo. You're doing amazing, man. Just stay disciplined like this. Good job, guys. Don't worry what would have happened or what should have happened. Okay, believe me. When we hit up there, I want gold to go to all-time highs. I want it to go to 5,000. But we got to be smart. You got to be calculated when you're trading. Okay. Macau, you 8% cashed in on that into that fair value gap. Congrats, guys. Good job. Okay. Now, do you guys mind if I go to the washroom real quick? So then we can come back. We can do some NASDAQ analysis. We got our US30 done. We'll revisit gold. I want to kind of let this thing settle down. I got to go to the washroom. If you guys don't mind, I'm going to make myself a ginger tea for my throat, and I'll be back in 5 minutes, okay? So it's a break for everyone. We have exactly 420 viewers on YouTube. I swear to God, I'll take a picture of it and show you guys. It's like a sign to go have a smoke break. Wow. Okay, so if you guys can hit the likes right now, subscribe to the channel. Oh my God, we didn't even hit 700. I'm gonna shut this YouTube channel down right now. So that scared me. We're at 699 and it went down to 698. I was ready to shut YouTube down right now. Don't let me see that, guys. I almost had a heart attack. Thank you, guys. Hit the likes, subscribe to the channel. 5-minute break for everyone. Go grab a coffee, go to the washroom. I know some of you guys had to go to the washroom too. Please don't pee your pants. Go to the washroom, guys. We'll come back. We still have another hour plus to go. We're going to do some NASDAQ coming up, and we'll watch gold, okay? If you guys are still trading, just follow. I'll leave it on gold right now. I'll blow it up just a little bit bigger. Watch it. I'll be back in 5 minutes, guys, okay? Thank you. Okay, everyone, we're back. I love my new induction cooktop. The thing boils water in less than 30 seconds. Perfect for this ginger tea. Cheers, everyone. Let's continue. It's great for a scalper that wants to have ginger tea. Okay, so you see we broke down. No bear volume closing below this zone. Still technically bullish. Will gold continue to climb? It possibly can. It's really volatile right now, so I would advise to just use caution right now when you're trading in this. If you've already hit some trades, don't just go crazy right now. Remember, it's not a casino. Let's look for calculated trades, okay? We're going to move off of gold right now. So if you guys don't mind, we're going to do a little bit of analysis on NASDAQ, because NASDAQ is also very important with tech. If you guys remember last night's earnings, this company, Taiwan Semiconductors, 2 a.m. Eastern, right here, guys. So this is big tech company, TSM. You can see that they beat their EPS, $2.59 to $2.92. Look at they beat their revenue from 31.65 billion to 33.10 billion, a growth of 41%, unbelievable growth. And look at the surprise, 13% guidance is very bullish. Okay, that's tech, semiconductors, AI, these companies like NVIDIA, SMCI, Supermicro Computers, AMD, it's all in the same family over here. So that's very positive. We'll see how NASDAQ opens up in Wall Street. Big financials, Charles Schwab, okay, they reported at 7:30 now. Now the reports are out. Again, I was talking about a lot of the big banks beating their earnings this week in the U.S. $1.24 earnings per share, they beat it, $1.31. An estimated revenue of 5.92 billion, they beat it, 6.13. Look at the growth, almost 27%. The surprise, 5.6. The guidance is new, has not been released yet. Okay, so big banks are reporting fantastic earnings in the United States with big banks. Let's just continue. Just go over any news. Okay, so we've got FOMC speakers now coming into the market. We've got Waller, Barr, Miran. Will be starting at 9 a.m. So over here on Financial Juice, you're going to see when they're making their remarks, you're going to start to see what they're talking about, okay? It's all about monetary policy. It's not as important as this gentleman right up here. This is Mr. Powell, okay? But look, the Federal Reserve Beige Book gives the green light to further rate cuts, okay? So the Beige Book came out 10 hours ago, and the Federal Reserve isn't directly impacted by the government shutdown, and they have just released their Beige Book report, which is an anecdotal survey on the state of the U.S. economy. It suggests that there has been a slight loss of momentum and activity over the past 8 weeks, which supports the messaging from Federal Chair Jerome Powell. So this could signal further rate cuts come in the future, and can continue to print money in the U.S., which may cause continue markets to move to all-time highs, more investors going into gold, silver, precious metals, if this trend continues, okay? So that's what we got news-wise, and let's just continue, guys, okay? So we're going to move with, we did US30, okay, so remember that little dip that came down now? Now it's coming right back up. So they're still kind of consolidating it prior to Wall Street market opening up. We're going to revisit this in just a moment. Let's do a top down on NASDAQ, okay, guys? So some of you guys, I understand, are trying to learn. There was someone in the group that said I was kind of confused with what I did, okay? So this is where learning comes into effect. You got to take your time to learn. It took me multiple years to learn this type of analysis, okay? So I understand that you're not going to learn it in 5 minutes or 10 minutes. It takes time. But let me break it down for you slowly, okay? So number one, we're looking at NASDAQ. NQ, if you're trading the futures, we all have to know that this is more of a tech-related index, okay? That's number one. There should be no confusion with that. NASDAQ is 60% or more of the of the securities, these 100 securities are all tech-related securities, okay? That's why this index is also called Tech 100, US Tech 100, right? So this has nothing to do with bank financials. This has nothing to do with oil and energy, has nothing to do with agriculture, doesn't really have to do anything with big box retail stores like Costco, Walmart, Targets, those Home Depot. That's more US30, Dow Jones, okay? And more S&P 500. This is more tech related, so there should be no confusion there, okay? Now we got to change our focus more on tech. So that's why I was keep reiterating. Last night we had TSM report, Taiwan Semiconductors, and they hit it out of the park, literally, just like the Blue Jays last night. So let's start our analysis. Right now, this is on the 5 minutes. So we can definitely just come in here and do naked trading. I don't mean literally we all get naked here and we trade. If you do that, that's in your own privacy of your own home. But naked trading is where you're just jumping in the markets right now and you're just going with the flow. I don't know basically on these 5 minutes how it was trading yesterday. No idea how it was trading last week, let alone how it traded all summer, okay? I don't know what the overall higher time frame trend is, so I just know right now in the 5 minutes it looks bullish to me, but it could just be bullish momentarily and the more higher time frame is bearish, and then I'm buying into a big daily supply block and then they're going to push me down, okay? So this is not advisable, okay? I don't advise this. What you want to do is a thorough top-down analysis. You want to start off with the higher time frames. Can you start off on the monthly? Absolutely. If we look on the monthly, what is the monthly trend showing us? Okay, it's showing that, and remember, each one of these candlesticks is an entire month of trading. So I'm going back to 2016, 2018. There's 2020, the COVID pandemic. There was that sell for those 2 months. And look at how we recovered out of COVID, continued to move back up, pull back, and continue to drop. There was the big pivot point in January of 2022, February 2022. This is when the Russia-Ukraine war started right here. We were trading gold live when that missile flew on February 24th, 2022, and the market sold off, came into a support, barcoded, continued to make higher highs. So if you ask me, the trend is bullish on NASDAQ. You can look at your RSI. There is divergence. There's been divergence since 2021. We're continuing to make all-time highs. Price is going higher. If you plot this same thing from 2021, the strength is slowly decreasing, but it's got right back up here where it could continue. There is bearish divergence, but the market is still pushing up. That's why I don't use RSI as an indicator of choice when I'm trading. I can reference it, but I don't put too much weight against it because I call it the really silly indicator because it can get us in a lot of trouble. So the monthly is continuing to move. If you want to just right now train your eyes to look for a zone, this right here, you see when the market stopped right there, it came down, stopped, multiple months, came in there, came back up, barcoding, came back down, came back up. There's where it held. There's a zone, 10,500. Will NASDAQ ever come back down to 10,500? We're trading at 25,000 right now, okay? If it comes down there, I'm probably going to buy NASDAQ with a bunch of you guys. That's a substantial discount at 10,000. However, there's also this monthly pivot right there where the market pushed down. That's a red zone. You stretch it into the future, and you see now January 1st, 2024, we closed above it. If you analyze this and you did that same zone into the future, look at right there. Tuesday, April 1st. This was when Donald Trump took over presidency. He introduced the tariffs in the market. The market sold off. And then he kind of cooled off on the tariffs, took them off the table, said we're going to delay them, extend them multiple months again. And then look at how the bars recovered. But look at that. That was a bearish month right into that yearly demand zone. There was traders waiting all the way patiently from 2021. I'm not just saying traders like retail traders like you and I. These are financial institutions waiting to load up. These are the big boys. So we want to follow what the big boys are doing. If this was a 5-minute setup too, if these were 5-minute candles, I would be doing the same thing with this 5-minute zone, stretching it into the future. This would be maybe 1 hour or 2 hours. It wouldn't be multiple years. But again, someone said, Ron, I want to learn how to swing trade. I want to learn how to invest. Here's Here's your webinar on how to learn how to invest. Right there. Stretch that into the future. Is it ever going to come back down into 16,000 again? Possibly. That might be a nice discounted buy with all of those buyers there as well. There's another one right above here. Look at those 3 wicks and bodies right there. That was a red zone as well. I can consolidate it more down, just right down to that volume like I normally do on the 5 minutes, and the volume is above. There's another monthly zone. If it ever comes into 21,000, that could be another potential buying opportunity for you, okay? So you can see how we can do this on the monthly, and you've got to do this now more lower time frame, okay? So I'm just going to remove these, and monthly is very bullish. Going on the weekly zones right there. There's a weekly structure. Stretch it all across into the future. Here was another weekly structure. Stretch it across into the future. What do we have last week? Last week was bearish. Look, we opened, we took out new all-time high. It came back down and closed very bearish. How did they open this week? Look at it, guys, okay? You can't tell me this is very technical. If you guys don't understand what I'm saying, you guys got to learn price action with us. Look at how last week, this is not a 5-minute candle. This is an entire 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. Look at where it closed. 99% near the low. Are you telling me that this week we couldn't open up bearish ignited and just take out that tiny wick? Measuring, okay? If you just measure that, it's unbelievable. Like if you measure that wick and you put it in points, guys, it's 35 pips. 35. We saw 5-minute candles bigger than 35 pips. A weekly candle that opened, this is market maker manipulation. They could have opened this and took out that wick, 35 pips, and came down and transacted down in here. Look how they opened the bar Monday. Bullish, ignited, and just did not break that, okay? There's a reason why they did not break that, okay? And look at it now. Bullish, bullish, bullish. We've engulfed all of last week's bearish volume, and we're trading up here with 1 more day and 8 hours to go. This is the all-time high. We're not too far away. If this was a 5-minute setup, I'd be saying, guys, can we fill up to this wick? And are we going to go up to that next wick? If we close with volume above here, there's your point of interest. Those bodies and those bodies, okay? 24,800 on the dot, psychological level, okay? But we're not analyzing weekly candles. Right now, we got to understand that we have a big, strong, bullish weekly candle. If we start selling, we're selling at the highest point, and we could be, selling into big buyers that could continue to push this thing up, okay? So now let's go into the daily. Now we're going to break this thing down, okay? On the daily analysis. Remember, guys, when you're doing a nice thorough analysis, look back in the past. Right there's where the previous all-time high started, December 2024, right? There's my first zone. Stretching it into the future, I can see how we came into it again, and then they pushed it right back down. Same zone, future, came right in there again, dropped it. There's the first bullish bar on June 24 that closed above this zone. That's where we can flip it green for now, okay? So if you ever want buy a nice pullback, you got to patiently wait for 22,000. We're nowhere near that, but you can see how that was resistance. Volume closed above, turned to support currently, okay? Do we have some pivots in the market? Absolutely. We can look at zones right over here. I'm just going to go over this real quickly. Right there, that bullish zone in those wicks. You can identify that. It's already been transacted in the markets where it came down, back up, came in, back up, came in, back up, came in 4 times, 1, 2, 3, 4 times, and continued to break for new highs. That zone is holding very strong, 23,000, holding strong, okay? Another zone that we can look at right above here where we continue to push out to that all-time high, right? That was all-time high right there. Wicks to the bodies, bring it down to the bodies, make it red, continue into the future. We closed above it right there, Friday, September 12th. Make it green. As soon as a bar proves to you, confirms that it closes above, look at the retest. If you missed out on Friday, Monday, Tuesday, it allowed you on Wednesday to come back in. And look at it, it came back down bearish, right, tapped right into the top of that green zone, and next day opened bullish, ignited, and continued. That was exactly like that gold trade that I just took. It was the bearish candle came in, tapped right into the green zone, I read it, and then the next candle opened bullish and I bought it, and it ran for 100 pips. So it's the same thing that we're doing on the 5 minutes that you can do on the daily, right? Okay, so these are zones below us now. There's a zone of support. This is a deeper one. That's a better one. The deeper you go down in the depth of market, the stronger these zones are, okay? The bigger the fish are swimming down here. These are smaller fish. They're still bullish fish, but the ones down here are those big whales. Those are those big institutions. The deeper the discount, the better the buy, right? Okay, so now let's just focus on pivot points, okay? So you see where the market came up and stopped right there. So let's identify points of interest. These are those yellow lines I place on my chart now, okay? So that's a daily pivot. And I tried to stay consistent with the bodies, where a body closed and where a body opened, okay? And then we pushed back down. There's another pivot point, okay? And then when it came back up, it closed above. And look at how it uses the yellow line as ongoing support now. See where that blue candle right there, October 1st, new monthly candle closed above. It continued to push out. Try to eliminate FOMO trading, fear of missing out, because from time to time it will come back down and allow you to get back in, but you got to be patient. And you see how it drove right into 50%, got a retest, and if you bought that next day, bullish ignited bar, you're in the money, right? And now we just traded to all-time high October 9. 25,225 is our all-time high on NASDAQ, right up there. And it basically looks like tweezer top highs on the all-time high right there. And the previous day tried to break it. And look at, they're equal, basically equal. We had the big sell on October 10, Friday, right? There's where it dropped last Friday. And look at how they picked it up. I showed you that weekly bullish ignited candle. Here's where it starts on Monday, right there. Monday, October 13 this week. Very bullish. Where did it transact into? Did anyone measure Friday's bearish candle? Find out the point of control? I hope you guys did. That's what's called weekend homework. Okay? I did. I hope you guys did too. Where's 50%? This is where now you can start to manipulate this point of interest and bring it down to represent more of that big body candle. There's exactly 50%. Are we above it right now? Yes, we are. Can we draw a point of control? That was a bearish point of control right there. That was a red bar of that Friday. Okay, so if I made it red, and then I see Monday was very bullish. We came in there, but look at where we transacted, right in it, and we closed. So it's still red. Then the next day, it impulsively broke out. This was Tuesday of this week, and then it came back down bearish. Look, this was bearish, 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 but look at when it came right back down to the opening bullish balance. They held it, right? Look how strong this point of interest is still holding. Right here, these bodies. Right there. Draw a yellow line, guys. Look, there's where we closed on Friday. There's our bullish ignited open on Monday. Look at the retest all the way Tuesday. Are you telling me they could not break this? No, they didn't. Buyers stepped in and they pushed it right back up and closed in the zone. Look at right there. Then that yellow line lines up properly with that wick. It lines up properly with that body. Look at this was a bearish candle that came all the way down into the green zone. Look at where it closed, right at the yellow line. Look at next day, bullish ignited candle. Are you telling me this is just by luck that the candles, daily candles are closing and opening at this area? No. There's a lot of transactions happening here. It's like a magnet for the market, okay? So that's why we have to identify this area. Me as a scalper, when the volume comes down here, I like to scalp off of these areas. If I'm selling, I like to close my trades here. If I'm buying, I like to buy discounts at these areas. Now, extending this red zone, look at yesterday. Yesterday, we got a higher low. We came back up bullish, created that higher high. So that's why I always say, guys, we need to punch out to create a new higher high in order to move higher. There's no equal highs, it's a higher high. Then it got rejected because it's still trading against this big bearish candle on Friday. We have not engulfed it. So sellers are still in the market pushing down. Look at where we closed. Right at that zone, guys, okay? And remember, that's a that zone was mathematically placed with the Fibonacci tool. We're not guessing that zone. Now look, today, opening, there's the closing balance. Yesterday, yellow line. There's our opening balance. It was initially bearish today. Our lowest point right there is our purple line. You see how we transacted still inside this zone, but it's higher, higher, low, higher, low, higher, low, okay? I'm not converting this zone green until today if we officially close above it, because it could just get rejected and come back down in here. I'm still giving the emphasis on sellers, okay? Remember, I'm a very technical trader. I need to see it close above in order to convert this zone green, just like I do on the 5 minutes. Right now, I see there was an impulse break yesterday, and look at where it closed, right at the zone. Today we opened, it came in here, still holding support. It's coming back up and trading. Look at the highest point right now, is right there. It's still a little lower than yesterday, but if we can break out of here, it's not too far away from filling yesterday's wick. Are we going to drive today bullish? We could scalp it right back up to this bearish candle, right where this whole thing started, okay, right there. Let's draw a yellow line so we know for a fact. 25,000, 120, 125 area. Can we continue to fill up there? If I'm measuring this right out of Wall Street, like purple line, if it breaks, that's 165 pips up there. That's 3 times my daily goal. I'm only looking for 50, 60 pips. If it gets up 150, 170 pips, 180, 200, that's well above my daily goal, okay? And then look at what we have above there. A wick, bearish volume, and the all-time high, okay? So what we're going to do is we're going to box in the all-time high, orange, to yellow line. See what I'm doing? Stretch that into the future. If we ever come back trade at the all-time high, it could be a double top opportunity. This whole leg is one top right up there. 3 days, it came back down. See how where it dropped? There's the big neckline, okay? And then now it's coming right back up. Are they going to lower high it here? Are they going to lower high it right there? Or is it going to transact back in that all-time high supply? Then that's the double top dropping. Or is it going to just continue to break out impulsively? If we close above, we're going to go through the mechanics. If it closes above, we make the all-time high zone green. We could be driving for new highs, right? But we're not there yet. So we still have to respect that sellers pushed it down last Friday. They could be repositioning themselves again with sell orders there, okay? Now, we are coming up very bullish right now. This is our daily candle, okay? Me as a scalper, remember I measured that 160 pip zone from this purple line filling up to there. Maybe I just want to cut that in half. Maybe that's all I'm looking for as an intraday trader or as a scalper, right in there. That's the halfway point, okay? I don't want to guess. Let's do it properly with the Fibonacci from the purple line, today's highest point, to right there to the opening balance of that bearish candle. You see, my yellow line is exactly at 0.5, 25,040. So now, if I'm kind of scalping my way up, if it breaks out today and we fill, I might get that fill right there, 85 pips, perfect to that yellow line. Then I do something. I either close my entire trade, I go to a break even, or I scale out and leave a runner. Okay, that's my points of interest. One other final point of interest that I like to do is opening balance, current volume. I know it's fluctuating, so this is not 100% accurate because the candle has not closed, but it gives me a rough estimate where the point of control is of the current volume going into Wall Street very, very soon in 20 minutes. Right there. There's the 0.5, okay? So if it comes back down bearish, all the way down here to this yellow line, I expect buyers to be here to protect it from breaking down, and maybe they can continue to push it up. If we lose this yellow line today, sellers are in control. The daily candle will have a big wick, and then they could push it down, back down to the opening balance right here, okay, to that yellow line. And then we see if they can hold it there. If not, we might turn black, turn to a shooting star, and then we transact with our lowest point of the day and start breaking down, okay? But right now, today's daily candle is bullish, okay? And we're making nice big bullish move off the bottom right here, but we still have the bearish all-time high supply above us, okay? So now what I like to do is break this daily candle in pieces. Let's go into the 4 hour now, okay? Let's see, the big 4 hour drop was Friday, 10 a.m. It continued into the close. There was the open Sunday night, continued to push all the way back up, right into Monday. Monday, they dropped it back down, okay? Coming into Tuesday, when it came down there, look, higher low. Do I see any 4 hour volume closing below there? There's a 4 hour point of interest. Any 4 hour traders, draw a white line right there. That's your, look at it, 24,420. There's a support. There was the wick that came down, volume closed right there, okay? And we continued to push above. As soon as it got up there, there's the resistance. We had a wild candle right here, Wednesday, 10 a.m., where it spiked up, came back down, closed inside here. So we are building now slowly, all the way back up. Here is now, here's Europe last night, okay? 2 a.m. to 6 a.m. right here. Bullish, ignited, 4-hour European open, pushing up, closing near the high. This is now representing pre-New York, 6 to 10 a.m. You see it's closing in 46 minutes, right at 10 a.m. It opened. It was initially bearish. We're still holding above that yellow line, point of interest. We're above this zone, and it pushed. And look, it got up to today's daily high right up there, but it's still just a tad below Wednesday's high right here. So it is technically still lower high. But we are moving up bullish right now, okay? But we are still going against this. So right now, if I look at this trend, what I see building off of the 4-hour is off this bottom, we come back up, it came back down. There's a higher low. It continued to push right there. I would consider that's an inside bar. You know, it kind of grabbed all the liquidity up and down, but still closed inside here. So this is that next bullish leg coming up right here. So are we going to break up to there, or are they just going to kind of hold it down here and then push it all the way back down in here? Okay, so right now it's hard to say. What we got to do is now dissect our 4-hour candles into our hourly. Let's go into the 1H. Now look at what the 1H. There's the big drop right there last Friday. Slowly came back up right into 50%. If you get your Fibonacci tool, when you see a big drop like this, 1 bar, 2 bars, 3 bars, all the way down there, and you see a pivot, grab your Fib tool from the opening, 1 bar, 2 bars, 3 bars, grab that one all the way down there, right? And then there you can see, flip it a little bit because the 236 should be the first retracement. You see how mine is 786, so I have to reverse it. Reversed. There's 236, 382, there's 0.5, and look at the 618 right there. So you see when it came all the way slowly right back into that golden zone, the sellers were right there, pushed it right back down. Again, it came in there, they pushed it right back down. Now we closed above there, right there, but then as it came back down, now you see we're transacting on the 1 hour, continuing trying to make our way back up. They could easily push this thing right back down. Look how thin the volume is right now. We got thin volume on the last hours. This is representing right now 9 a.m., there's 8 a.m., 7 a.m., 6 a.m., there's 5 a.m., 4 a.m., there's London, there's pre-London. It's coming up. They could easily push this thing down. Then it will be considered like a double top on the hourly. If you look at it like this. Came up one leg right there. There's the top. All of this garbage is the consolidation. That's your neckline. Coming back up, there's your second top right there. Thin volume going up. A big seller could just jump in the market and just continue to drop this thing right back down and transact down in here. If we look at the lowest point of the day, the purple line, there's a wick, wick, wick. If we close with hourly volume below there, retest this, we could continue to drop to fill that big wick and drop down in here. Then we're going to get tech and NASDAQ selling off, right? But it could also continue to move bullish. So what we got to watch for is, as well is, can we get hourly volume maybe close above this purple line, retest, and maybe we're driving up to here, continuing to drive today. So right now, hourly has a lot of thin volume, okay? Going into the 5 minutes, we're 13 minutes away from market open. If we just look at the 5 minutes now, starting over here from like, this is pre-London, 2 a.m. This is where London opened, 3 a.m. We pulled back, higher low, new higher high, pull back higher low, new higher high, higher low, and a new higher high. I can put all of this 5-minute volume in a bullish channel. This is our bullish channel tool. Let me find where this guy is. Here it is. Okay, so see where I'm going to plot it? From the lowest point of the day, I'm going to kind of keep this channel. See the channel? So I plotted it right there, the lowest point of the day. I attached it, point A to point B, C, D, and you see how it's still holding, still holding, still holding. We actually have a higher low and a higher low. We haven't came down to the bottom of the channel. The dotted line on this parallel channel is exactly 50% from the top of the channel to the bottom of the channel. So we are currently still above the dotted line, which is telling me it's still bullish, that we could attempt to transact back at the highest point of the day and to the top of the channel. And then I kind of plotted it right up here where we got kind of rejected. I could maybe increase it just a little further to incorporate those wicks. Sorry, let me just replot this thing. That's pretty consistent. I see those are impulses. I got all in there, okay? So we are currently in a bullish channel, moving up, but look at here. The highest point of the day, wick, 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 okay? Can we consolidate all of those wicks to the purple line with a red box? Kind of like putting a hat, okay? Putting a hat on there and stretching that hat into the future, right? So you see now, that was a big seller where the market was coming up and they sold it all the way right back down. Now we're slowly coming up there, and what we got to do is we got to, officially watch what's going to happen up there, okay? Are we going to get a break of liquidity? Are they going to spike the daily high? Are we going to get something like this where they break it out impulsively, come back in, do this, and then drop the market? That could happen, guys. Let's consider that pattern, okay? Pattern number 2, it could break and close above there, and then we flip that. We're above the trend line, trend channel. This turns to green, might turn to support, and we're continuing to drive back up, right? Maybe it doesn't even get up there. Maybe they're already pushing it down, came back up, and they're ready to push this thing down, okay? So that's what we got to watch for going into Wall Street with NASDAQ. Little cut lines. I just want to kind of acknowledge that there's good 5-minute support when the market just dropped right down there at 8 a.m., kind of held, and then we push back up. So we do have support right there, okay? So that is NASDAQ. We're in this bullish parallel channel, but we're approaching this critical area up here. Let's add, I don't have the daily bar on this one. I'm not sure why. On this chart. Why is it not showing up? Oh, there it is. A little bit of a delay. Okay, and then this indicator here that's following it, this 0.5, this kind of like orange line, it's representing exactly 50% of the entire range of today's daily candle. From the lowest point to the highest point, that's exactly half of the entire range, okay? So we can use it as like ongoing support going forward. Okay, so let's leave NASDAQ right over here to the right. I gotta add, you guys like EMAs, see they kind of came off my chart, so I just gotta go to my indicators, find out my EMA. Where is it? Moving average exponential. Okay, so it's a 9 EMA. It'll eventually come in here, and then I just gotta change the color. I normally use green for an EMA. There it is. Okay, there's the 9 EMA, and then I just got to add my 200 EMA. Sometimes my daughter plays with the charts, and she plays around with these things. So EMA again, go to my settings. I want the 200, so go to inputs, 200. I use a purple line for the 200. Go back to style, change the color to purple. I'll make it a little thicker for you guys, and then it should be added on the charts in just a moment. There it is. So the 200 EMA is above our 50% of our entire range. We're right at our EMA, okay? So that's NASDAQ, guys. We're going to keep NASDAQ right over here to the right of the chart. We've got US30 already producing a top, coming back down, neckline, double top, coming back down, could drop even further. We are now 7 minutes away from Wall Street. Okay, so are we ready, guys? We're going to watch US30 on the left. We're going to watch NASDAQ on the right, just a little gold. Okay, so it broke, it broke, it broke. No black bearish volume, closed below that zone, and buyers are coming right back in, taking it to new all-time highs. Okay, so if you guys are trading gold, gold is unbelievable, okay? Even coming out of that big, that volatility, crazy volatility, it is continuing to make new all-time highs right there. I kind of cut that 250, 260, cut it in half at 255, okay? So we're not going to be watching gold for Wall Street, but if you guys are trading it, it is still very, very bullish, okay? And still going. Okay. If you guys can kindly hit the likes on YouTube, we do appreciate it. If you guys subscribe to the channel, we also do appreciate it. We got new sessions coming in this week and next week. Okay, so we did a fun Tokyo session last night. We got 150 pip, zero drawdown move on gold. So we want to do a little bit more Tokyo sessions next week. We'll update the schedule every Sunday with you guys, but I'm just telling you, I'll be doing the Tokyo sessions with you guys Monday, Tuesday. Wednesday will be a New York session, Thursday another Tokyo, and Friday we're gonna do a London. So also tomorrow, guys, later tonight, I can't do a New York session. I have a very busy day, so I'm gonna do a live London session with you guys tomorrow. So look at it. It's starting 2 a.m. Eastern on YouTube and Zoom. 2 a.m. Eastern. We're gonna go till 5 a.m. Eastern. Okay, so I'll probably be pulling an all-nighter with you guys. I don't even know. I normally go to sleep at midnight. I don't even know if I can sleep for 90 minutes. And then so it might be an all-nighter, and we'll go till 5 a.m. Okay, so that will be, and then stay tuned for next week's schedule. We'll do Monday, Tuesday, Tokyo. Wednesday will be a New York session, and then Thursday again a Tokyo, and then we'll come in and do another London session next Friday. Okay, and we're gonna kind of flip-flop every single week with some New Yorks, post-New Yorks, some Tokyos, some Londons, some webinars. Lots and lots to come, okay? And there's also a free Telegram channel pinned at the top for you guys. There's promotions going on for trade ideas, lifetime trade ideas going on. And all of our links to our live trading sessions, our blogs are all available for you guys. And also trading with Dave in the post-New York sessions and the private Zooms. This is with Dave and all the snipers, pipping and dipping as well. Shout outs to Ibrahim over here. Look at it. The man is using smaller lots, like a 0.15, but holding these things. And look at, they're yielding, they can yield $60, $200, $19. If you look in the Discord over here, in our commodities channel, you guys are using the magnets. But there's a lot of, like, guys, you can trade with the team over here, like Ibrahim, doing fantastic, guys. There was one where Ib was trading with small, oh no, it was Dennis in our group. Where's Dennis? Dennis, where are you at, Dennis? Somewhere in here. You guys are milking it. I don't, Dennis is somewhere in here, but he was trading with, I think, 0.01s. And made some, yeah, right over here. Look at this, guys. 0.1s, 0.15s, 0.1s, holding gold for over 200, 300 pips. Look at this. $200, $200, $200, $200, $300, $400. This is unbelievable, guys. Okay? So when gold is moving, you know, like, lower your lot sizing if you have to, and just let, you know, you don't have to be a scalper like me, okay? You can let things roll, right? Especially with the volume we're having as of late. And you don't have to panic as well, okay? Now we're 3 minutes away from market open. I'm going to remind everyone, please use proper risk management. Some of you guys have already passed phase 1 in your challenges. Some of you guys have passed phase 2. Some of you guys are getting a payout. Some of you guys have hit daily goals, weekly goals. Is this the time where we're going to over leverage now with Wall Street and try and gamble? Let's not do that, okay? Let's remain disciplined. Let's remain focused. I've hit my daily goal. I want to be honest with you guys. I've hit my daily goal. I actually traded Tokyo last night and hit a daily goal. I'm telling you guys straight up, I'm not going to risk my profit. If I wasn't even trading with you guys, I wouldn't even be entertaining Wall Street. I'd be on with my day. But we're going to look at Wall Street. If there is a setup, we'll take it. I'm lowering my risk right now so I can retain my profit. I don't want to risk everything in Wall Street and lose everything that I just gained today. Because time is money, you know, like we're sitting at this chair for over 4 hours with you guys, right? So not only are we investing we're investing in our time. You know, it sucks when you're trading for 3, 4, 5 hours where you're in profit and then you lose it all. Not only did we lose money, but we also lost 4 or 5 hours of our time. Time is very precious. It's one of the precious commodities in life. You know, you can't put supply and demand on that thing. Time is the most precious commodity. I wish I had more time to spend with my loved ones, you know, every single day. We can trade the markets 24 hours. The markets are always open, but time is very precious. So that's why you gotta if you hit daily goals, not only did you make money, but you also invested time in the markets. You got to put a price tag on that as well. Your time is very important, okay? So understand that. Don't just go pissing away everything, because you're also pissing away your time. Okay, so we have 60 more seconds for market open. If you're watching NASDAQ, NASDAQ is over here to the right. If you're watching US30, US30 is right over here to the left. You pick your security. I just want to look at spreads right now. Again, I was trading gold, so I have to change my sizing because I'm trading a whole different security now. And I want to lower my risk, absolutely. Because Wall Street opens up. These candles can be 50 pips, 100 pip candles, right? If you're trading with a little 20, 30 pip stop loss, you might get stopped out and the candle hasn't even closed, okay? So let's see what happens. And we're going to go till 10 a.m. You get our schedule on our website, stocksnipertrading.com. All of the free blogs are available on the website. The live scheduling, all of our education, everything is on the website. Okay, here we go, guys. Wall Street market is opening. Bullish ignited, turned bearish, bullish. Okay, it's going to pump right through here. They're going to reject this thing back down. Looks like NASDAQ is bearish right here. Okay, so US30 is holding bullish. Remember, we had bank earnings. Bank earnings were pretty good. Charles Schwab had great earnings. Let's see if this carries forward. Some of you guys might wait for the first 5-minute candle to close. That's great. Some of you guys might be in a trade prior to Wall Street market open as well. Some of you guys might be waiting for the first 15 minutes, okay? Whatever your plan is, stick to your plan. Okay, so that was a big bullish candle that came up here. They've rejected it back down. Will it lose all of its opening Wall Street balance and start shooting down? Or will it hold and reload and come back up? So it's coming down to the opening balance again. Will it continue to reload itself back up? Okay, NASDAQ is bullish, coming back up. US30 reloaded, continued to come back up. But it's kind of just trading in here, okay? Lots of selling pressure. You can see every time it comes up bullish, they're pushing it down. Every time it gets to this opening balance, it comes back up. Now it might lose its opening balance. It still has not lost it yet. So these buyers at Wall Street market open are still very, very, very strong. How many times has it came down in 10 minutes down there and refueled itself? Look at NASDAQ continuing to break, okay? So very strong opens on both of these indices. And then we have our FOMC speakers speaking right now. Mirren is speaking, Waller is speaking. Okay, but there's a lot of resistance up here. Every time it comes up here, sellers are rejecting it back down right up here at the point of interest right there. 46,430. So guys, there's a lot of sellers up here and a lot of buyers at the opening balance. Will they flip the, holy shit, that was like 5 times now I've counted in my head where it's came down and went back up. Came down, back up. This will be another time at the opening balance if it continues to hold. Wow, okay, so it's continued to refuel itself. Will it lose this opening balance? Will the candle turn bearish back down? Or, wow, so it's still holding, okay? So we have 2 more minutes to go. This is the first 3 minutes of Wall Street market open. NASDAQ came, traded right at the top of our parallel channel and got rejected back down. Holy, okay? We have some serious fighting between buyers and sellers. Now you see, they lost the opening balance. So now our seller's going to redistribute all of this volume to the downside, which they very well could. And then we've got to see if they'll break this previous low right here. That was what was holding support right there. Will it be a higher low and come back up? Will it close with volume below here? So you see how they penetrated that previous low and created a new lower low? Okay, in order to continue to go down, we got to create lower lows. So they've done that, but now it's coming right back into the opening balance. Look at the spin top now. So see how the range is. Let's see who's going to close this out with 1 more minute to go. Sellers are in control now. So remember all of those buyers that were buying, they all got absorbed and they're currently in drawdown, if not getting stopped out. They could be adding more positions, but if this closes bearish, we could continue to break down. Look at our daily candle now. It's completely got a wick above us. This is that inverted hammer candle. Okay, there's our opening balance today. Just like that 5-minute candle, how it kept refueling at the opening balance, will this daily candle do the same exact thing? Okay, will it hold? Will it curl back up? Or are our sellers going to continue to come down to the opening balance and flip today's daily candle bearish and we're going to start selling off? Okay. So buyers are coming right back in. Where? At that white line. Remember, that's the 4H or hourly support. So our higher time frame buyers are still there protecting this from breaking down. That's coming right back up to a bullish spin top. So these are those candles I hate trading. They're like a coin flip. It opens bullish, goes back down, comes up, goes down, comes up, goes down. Here's the close. It's closing with bullish volume. Wow, okay. So it could continue to move to the upside. Here's bearish. Now we're barcoding. Bearish, bullish, bearish. If it picks up a higher low wick, it could break and fill these wicks and start to go back up. This is where maybe we could possibly entertain a buy, right? Okay, I'm going to go in a buy. See if it can fill up to maybe not to the highest point of the day, but to like 50% up here. I'm going to test out a buy here. My stop loss, I'm just going to place below here. It's a tight stop loss. Okay, kind of just want to be just right below here. Okay, so I'm in a buy. It's barcoding. It's not the greatest opportunity to buy here, but I want to see if the Wall Street buyers can continue to hold this thing up and if we can just take out this resistance without being stopped out. I have a tight stop right below the red box. I'm telling you guys, it's a very tight stop loss. Okay, I'm still in this, looking for the buyers to continue to ask and trade above here and get it out. Okay, I'm going to buy on US30. My stop is just below here. I'll verbally tell you guys when I get stopped out, just below this red box. There's that opening balance holding, retested. All we got to do is flip the candle, turn to a bullish pin bar and start to drive, take out that resistance, get it up to the top of the red box. That would be about 45 to 50 pips up there. Then I would be at a break even. Here we go. So let's see if it can fill, and get up there. As soon as it starts to move, break through here, you know, you can reduce your risk if you like. Let's see if we can continue to push up there. This is where the resistance is. This is where all the sellers are. Okay. So with Wall Street, let's try and break through this. If we can't, then unfortunately the sellers are stronger. Okay. So we couldn't break there. It's coming back down. Can we continue to ask and trade up here? I kind of want to go with Wall Street, had great earnings, financial earnings. Can we continue to break through this resistance? I want to go with that higher low wick that tested the green box down there that picked up our hourly buyers. My stop loss is not below there, so I told you it's a tight stop. I'm not risking a lot on this. I verbally told you guys that. Now let's see if we can break this red line, okay? If we can close the volume above that red line, that would be fantastic. We have 2.5 more minutes to go. Excuse me, 2.5 more minutes to go. So this is kind of like the second half of this candle. We're still trading in this tight range, but let's see with Wall Street if we can break through here. Man, these spin top candles are nasty. So it's like a coin flip still. The sellers can win, the buyers can win. It could close virtually right where it opened, right here. And it's barcoding. Bearish, bullish, bearish. You know, sometimes when we trap in this volume, this is the accumulation range right here. This is where can we get like a little bullish flag breaking out of here? That's the tight consolidated range. Tough open. Very, very tough. No range. We're not moving anywhere, but still, let's see if we can close with some volume above here. I just want to see if we can break that red line. That's what I want to see. Okay, there we go. Let's see if we push this daily candle. Come on. Get it up to that red line and break this with Wall Street. Let's see if we can break through here, get above 45, 50 pips up to the top of the red box. Then we can reduce all risk. But we also got to watch closing balance, closing volume in 60 more seconds. Scotty, we need this push, man. What's going on the 1 minutes? Do you see any double bottoms on the 1 minutes? Oh, we got good closing volume. Let's get these 1 minute candles. See these wicks? We just got to cut through these wicks on the 1 minutes. We are building on the 1 minutes, but man, they're really holding it down right here. 46,430. Let's go, Scotty. Let's get this break, damn. 25 seconds to go. Unbelievable. I'm going to go bald on this trade. I'm going to lose all my hair here. Man, I hate when Wall Street does this, where it doesn't know where it wants to go. So sellers are holding tough. So they could easily break this thing down on the next bar. Okay, so we got to close strong. Here's the close. It's a bear spin top. We opened bullish ignited, one more bar. They rejected it right away. So sellers technically are in control. Lower high, lower high, lower high. We got to continue to build it back up there. It's tough, okay? So we'll see if our buyers are stepping in. I have a very tight stop loss, guys. Okay, I'm just right below this red box and at this wick. So if we can't move out of here, I'm definitely going to get stopped out of this. Okay, and I don't want to engage in this because then this is where they redistribute all of the volume either to the downside because it's been accumulating. Okay, so our buyers did not break. Let you guys know I'm still holding it. I'm still in it. There is a good wick down there. I'm still in it. Still holding it. Still in it. It's good wick. But we're going against a lot of bearish volume pushing it down. Still pushing it up. I'm still in it, guys. Okay. Good push up. We're coming back almost. Getting it up there. Man, if we can flip this bar, we could cut through that resistance. If we pick up all this liquidity down here, we got it. Okay, so we're moving our way back up, but we still have this bearish head. Oh man, Scotty, it's not gonna flip, man. That's it. It's coming back down. They're aiming for my stop. Still holding it. Remember, my broker's a little different than this trading view. That's why I gotta verbally let you guys know. I'm still in it. Still holding this. Holy shit. 46,325 is holding some serious support down there against this heavy candle. My God, we're pushing it right back up. Flip this candle. Damn. What a fight between buyers and sellers here. Oh my goodness. I'm still holding this. Okay, it's in drawdown. I didn't get stopped out, even with a really tight stop loss right below 46,325. They still haven't got me. Man, if this candle flips, holy shit, we could really flip to the upside. Wow, there's a lot of selling pressure. My goodness. Still in it, still in it. This is crazy. But I think the Bears are going to win this. I think this attempt, I'm going to get stopped out now. 2 more minutes to go. The volume is still consolidating in this zone here. Bearish, bullish, bearish. I hate trading when Wall Street's like this. It's unbelievably annoying. But it is still trading inside a zone. Buyers are buying, sellers are selling. We're consolidating. Eventually this volume is going to flip to the upside or to the downside, okay? I'm hoping to the upside. I'm barely hanging on, but I'm in there. We have one more minute to go into the close. Look at NASDAQ is flipping nicely. Okay, so NASDAQ went down, coming back up. Can we flip our bar on US30, get it back above here, blue? Closing volume, if we flip this into a hammer and we close above, we could redistribute on the next bar. Man, what a fight right into the close here. 50 seconds to go. My goodness. So the volume is still in this consolidated zone. Wow, good push up. One more time, guys. We're getting good orders bought down there, but it's just so much strong selling pressure up here at 46,400 at this hourly white line. A lot of tough sellers up there holding it down. Here we go into the close, last 30 seconds. This is going to dictate the next bar. This will dictate whether we're moving to the upside or I'm going to get stopped out. This close on this bar. Ten more seconds. The 1 minute candles are gross too if you're looking at these things. They're gross. Okay, here's the close. Bearish. Okay, we open bullish. This is when you want to punch out after all of that accumulated volume. Okay, this is when you want to punch and break through here. Okay, there's the breakthrough, but we got to get above that red line. Remember up here is 46 to 50 pips up there. Okay, I'm not at a break even yet. I escaped that, but I'm not at a break even. I want to see now, I held. Can they now redistribute this volume to the upside, okay? I kind of want to see also, if we get closing blue candle above this red line, we could take that into our next candle. Remember, this is 9:45 as well. So are we going to get that 15-minute beautiful accumulation and start to break out of here? Man, it's set up perfectly for, for us in buys, but there's a lot of sellers we got to cut through here. Okay, but I'm telling you, if I get it up to 50 pips up there, I'm going to go to a break even, right above this red zone. There we go. Okay, guys, please manage your trades. Okay, please. There's the 50 points. Okay, right to the top. Okay, I'm going to a break even now. One more punch out of here. I'm going to take out 80% if I can get it, but I'm at a break even now. So it's, again, break even. Okay, I'm going to take out 80% up there. Robotic, taking out 80% at 50 pips, leaving the rest running, okay? But, oh my God, they almost stopped me out, but they didn't. Wow, if we can close, again, above here or here, we could get more. But I'm on a break even, guys, so I told you verbally, guys, red line right here, take out the 80%. There, that's it. The trade ended, okay? So my 20% break even, but I grabbed my 80% up there, okay? I don't like the way how Wall Street is trading. I would avoid this with like a plague. Stay out of this for now, okay? What I would watch for is are the buyers going to close it above here or sellers going to close it above here? You see this big red zone? I would make it neutral. Just make it neutral like this. And just watch how it continues to accumulate in here. Guys, was that too fast for you guys? Do you guys understand that? You guys understand why I took out, when it started moving up through there, I took my stop loss. It was in drawdown. I went to a break even. When it broke out right there, I took out 80%. I had 20% running. Unfortunately, the 20% that I had to break even got tapped out, okay? I didn't want to leave 50 pips on the table, especially trading in this consolidation. Did you guys understand that? I know it was tough, guys. This was a very tough Wall Street market. This is, look at it, it's going nowhere, right? Even NASDAQ, bullish, bearish, bullish, bearish. I would avoid trading this, guys, okay? Avoid trading this, please. Wait for like 10 a.m. This is just, it's accumulating too much right now. Too many sellers, too many buyers, and it's going in no direction. This will frustrate you as a trader, right? If you're trading with leverage and you can't withhold a little bit of drawdown, you're gonna drive yourself crazy with this, okay? That's why I just want to get my money, get out, go to break even, and just let it do what it had to do, okay? This is ugly price action, Okay, even with NASDAQ, look at how gross it is. Like all of this. You can't trade this shit, guys. I'm sorry. Even it's too difficult to scalp this. Let's wait for something bigger. Gold. Gold is, again, closed above the red zone. Green, make it green. Right? And then it came, pulled back, and again, buying right to the all-time high. Remember these numbers? 260. That would be your next all-time high. Okay? Gold is still bullish. Look at the range of US30. This is disgusting. Stay away from trading this stuff. Even NASDAQ, guys. Bullish, bearish, bullish, bearish. It's gross on both sides, okay? I don't normally say this about the indices because I love them, but I got to be honest. This is the worst price action that you can trade. So stay away from this. If we escaped that trade with some profit and we got out with break even, life is good. We had a couple trades. I hope everyone, did well, learned, and this is part of discipline. Stay away from this shit. Listen to me, guys. Done for the day. Boom. Time to walk the dog. Have fun, man. Guys, just a reminder, don't forget, live London later tonight, okay? We're going to be coming back at 2 a.m. Eastern. So if you do London session, don't miss out. We're going to do gold. We're going to do DAX, the German 30, German 40. We're going to look at the German stock exchange. And we're also going to do Euro USD or GBP USD. So we're going to do one commodity, one index, and one Forex pair, okay? That's going to all be for London session, 2 a.m. Eastern to 5 a.m. So we're going to start at 2 a.m., do some pre-London analysis, do our top down, go over the news, and then we'll get ready for 3, and we'll trade London 3 till 4 to 5 a.m., okay? Scotty, unbelievable. Nice. Good common day, Scotty. Good New York scalping. Yeah, you got to be quick on New York scalping today, okay? Guys, unbelievable day. Dave will be coming in post New York with you guys. I think we've done really well today in the markets. We had a couple positive trades with gold. That one was a tough trade, but guys, I have to verbally tell you where when I get stopped out, where I take profits, because my broker trades different from TradingView and this. So when it came down there, I wasn't getting stopped out, right? So that's why I hope you guys can listen to me. I verbally explain to you guys everything that I'm doing, okay? I can show you guys idea where I'm placing my stop loss, but my broker is a little bit different. So they came close to tagging me out, but they never tagged me out. And it was a pretty tight stop for this type of shitty volume. Scotty, you were close to break even too. You were 2 pips away, then it went 80 pips in profit. Yeah, sometimes the price action gods are looking out for us, but I'm happy it worked out well. Guys, are we all clear that this is horrible volume? Okay, just please, guys, you got to understand that. Like good volume is when we're trending like this, where we're moving up, down, up, down, up. Right now, it's too many wicks above us, too many wicks below us. It's going nowhere. So like even NASDAQ, this is the time where you got to just trap the volume and continue to wait it out, okay? Like what I say is, it's either going to just continue to trade inside this box, okay? Or it will eventually maybe accumulate buyers, close, see that big push out, but it didn't close above there, because if it did, they could have redistributed to the upside. Another option is, maybe we're going to move today to the downside. If sellers close it below there, then NASDAQ will sell off. Same exact situation with US30. Same thing. You can box all of this in like that, consolidate it, 3 directions. We're either going to just continue to trade inside this box in here. You're welcome to trade that if you want to, but you got to be very disciplined in here. Or you wait for that candle that we pushed out on that I took profit. I was hoping that would close above. We would have came back. We would have been filling today's upper wick. We would have been loving life up there. But there's strong sellers. They're showing us. And so maybe we're going to move to the downside later today. And US30 and NASDAQ are going to sell off today. It's going to be one of those days where it's a sell day, okay? But we're revisiting right there the opening balance. Maybe big, strong buyers will come back in and take it back up, okay? So those are like the 3 possible directions that we could move going into 10 a.m. If you've already hit your goal for today, stay out of the market. Don't even entertain this. Go on with your day. Walk your dog, go get a coffee, go enjoy the day, go for a workout, go do what you've got to do, right? Just get out of these markets. That's what I'm doing. I'm going to go for a walk, go get a coffee, go to the gym. I don't have a dog to walk, so I'll walk myself and maybe have a smoke myself. Okay? Guys, I'm going to take off now. I think we've done enough in this session. Just a reminder, if you want signals or if you want to join our Discord community, here's Mike, beautiful cell right over here. Good job, guys. We've got indice group, there's a commodity group, forex group. We'll get the crypto group continuing to move as crypto gets exciting, but just trade with a team, trade with a positive community. We're here for you guys. If you need signals, we also got signals available for you guys. And free Telegram channel is pinned at the top of YouTube for you guys. Promotions, giveaways, free blogs, everything, our scheduling. Also on go to our website, stocksnipertrading.com. There's our schedule so you don't miss out on any of our sessions. Hopefully you hit the notification button as well when you subscribe to YouTube so you get notified. And then all of our free blogs are available right over here, okay? There's lots of good blogs about price action, about technicals, fundamentals, psychology, emotions, trade idea recaps, all kinds of stuff going on. A lot of free blogs. There's a lot of them there. Lots of education, okay? And thank you to everyone that subscribed. We hit our psychological number of 750. We're on our way to 87,000 in the next near future. So thank you guys so much. I appreciate you guys. Had a great session today. Look at how it's continuing to build back up, right? So you don't want to play these games, okay? Because it's frustrating sellers selling down there and it's frustrating buyers buying up there. So the market is still accumulating. Let it accumulate. Whether it takes another 15, 20 minutes, 30 minutes, eventually it may break to the upside or to the downside. But right now it's still accumulating. Same with NASDAQ. It's still accumulating, okay? You can be patient and follow that accumulated volume with confirmations. Look for bodies to close above or below, right? And that's how I would trade this if I was continuing to trade. When am I doing Asian session? We'll do it Monday, starting next week. Monday, Tuesday, and Thursday will be Asian sessions. Wednesday next week is a New York session. Friday next week is a London. So I won't be doing an Asian session later tonight. It's going to be a live London 2 a.m. It's time for Chibape. Chino, you read my mind, bro. I want Chibape and some pita right now. If you guys don't know what Chibape are, they're Albanian meatballs grilled on the barbecue. They're with some nice pita bread, some kayamak. Oh, man. Chino, are you Albanian, bro? They're so good. Have a good day, everyone. Thank you guys so much for the likes. Appreciate you guys. I hope you guys have a good day today. And think positive, stay positive. Enjoy your day today. Stay focused, disciplined. And we'll see you guys tomorrow. God bless everyone. And we'll see you guys tomorrow. Enjoy the next session with Big Dave in our post New York, okay? And if you want to join Dave's session, you're welcome to. Just visit the website and sign up and you can join Big Dave, okay? Have a good day, everyone. Thank you. We'll see you guys live London, 2 a.m. Eastern, okay? Have a great day. If you've hit your daily goals, please, guys, show some discipline and walk out of these markets, okay? Learn discipline. It's a skill that you can take with you the rest of your life and you're really going to appreciate it. Stop going back into these markets and giving back to these market makers. Don't feed into them, okay? Believe me, it'll go a long way when you learn this, okay? Thank you. If I learned it, you can learn it. Have a good day, everyone. Thank you. God bless everyone.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.